A warm welcome to Naventus and Partners Technology Summit. My name is Katarina Rolfsdotter Jansson and I will be hosting this. And this summit today is presented and hosted by Naventus, Zettervalls, Deloitte, FNCA, Nordnet and Nasdaq. And we will be talking today about exciting companies within the technology sector. And we have lots of speakers lined up and also a panel talk. So stay tuned, it's going to be an exciting day. The first speaker is from BuildData. His name is Gustav Geisendorf. He's CEO and he's next to me here ready to step up on stage. And BuildData buys, runs and nurtures companies that use building lifecycle data to drive efficiency and also growth. So the stage is yours, Gustav. Here we go. Good morning.
Good morning.
Welcome.
Thank you. Good morning. Pleasure being here. My name is Gustav Geisendorf. I'm the CEO of BuildData. So the agenda for this morning is to, some of you may not be familiar with BuildData, so I'll give a quick recap of what we do and what our strategy is. I'll talk next about our financials, then I get into our financial targets and investment highlights, and then we'll do a brief Q&A towards the back end. So just to start it off, so what are we? So we're a cloud-based, or SaaS for some of you that may know, a cloud-based company entirely focused on the construction space. So we provide a SaaS-based cloud collaboration platform that is being used by different stakeholders in the construction phase. We're not new, we've been around for a fair amount of time. We have a track record of 20 years. We have operations in the UK, Ireland, Australia, as well as in the Middle East. We're just over 100 people. We're growing fast, and that's the intention. We had 21 million of sales in this last quarter that we just ended in at the end of September. We did the rights issue in June of 2021. We raised 100 million Swedish kronor from a number of institutional investors, AP4, Norron, FI Fonder, and a few others. And the reason for raising that cash pool was to do acquisitions, which we're embarking on as we speak. We want to have predictable revenues. We have about 80% predictable or recurring revenues. And I'll talk more about, on the next few slides, what actually we sell. So we're not new on the block. We're one of the few beneficiaries, or not one of the few, but we've clearly been one of the beneficiaries out of the pandemic based on what's going on in our industry. And that's really led to that technology overall in our industry has gone from a nice to have to a must have for almost all stakeholders. And we're focused on three particular products. One is quality management, which is basically how you provide quality on construction sites. And that has to do with gathering data through a field app, as we call it, where you basically is being used as a collaboration tool for all people on the construction site, to make sure that data is captured in one unified format and also providing reporting behind it. And then handover is basically when all the information has been gathered on the construction site, but all the various stakeholders, when that gets handed over from the main contractor back to the property owner. It's that entire data set that is then used for the property owner to manage a building for the rest of the entirety of the life cycle. And asset information management really captures the full spectrum of information throughout the building life cycle, which goes all the way from design to the construction phase, handover, and also how you manage the assets in a facility management stage. So we're operating under three brands. We got Zutec, we got Resisense, which is a tenancy management brand, and then we have Create Masters, and those are the brands that we're rolling out as we speak. And then the intention, which I'll talk about next, is to add more brands to our portfolio as part of our build and buy strategy. So our strategy is to be a regional champion. For those of you that know construction, knows that construction doesn't travel that well for all the obvious reasons. It's not that easy to move a crane from one country to the other. The same actually goes for software. We follow our customers, but it tends to be regional champions. And that's what we want to be. We want to grow with our customers, and we want to be focused on our home markets. And our home markets are the ones I mentioned before, so the UK, Ireland, and Australia primarily. About 80% of our revenues is in the UK as we speak, and we're going to be focused on those 3 markets in the near term as well. Our focus is to build our market presence across the whole project lifecycle. Having recurring and predictable revenues is an absolute necessity if you want to be a real player in SaaS. That's what we're building. We're up to 80%, and that's been an increasing journey. Our recurring revenues keep on going up, and above all, I mean, what we want to build is a contract portfolio, you know, to keep on growing that, and that's for everyone that knows SaaS. That's kind of how it works. You build a contract portfolio, and then you call down on that revenue during the duration of the contract portfolio, and that's exactly what we're doing. So we're building growth for the long term, and and that's in particular our focus, to make sure that our contract book is growing. Having best-in-class products and knowledge is absolutely fundamental. We do believe we have that, and that's what our customers are saying. It doesn't mean that we should sit here and say that our products are good enough not to invest in them. We're doing quite the opposite. We're investing a lot in product. We're investing a lot in new technology. So we're having some quite exciting AI and machine learning launches that we're going to be launching in next year. We're ramping up our pace in acquisitions, and then above all, we're focused on creating value for our shareholders. We have about 1,600 shareholders as we speak, and those are the ones that I report to and the board report to, and want to make sure that everyone is happy with our trajectory as a company. So our acquisition journey has started. I joined about 18 months ago, and in the beginning was about making sure that the strategy was right, the team was right, and that we build the fundamentals for growth. The first step was to grow organically, and then as of late, we started buying companies as part of our build and buy strategy. So we've done 2 acquisitions to date. The first one was a cleanup transaction in Australia, and then we bought a company called Createmaster, which essentially doubled our revenues. And that's the Createmaster acquisition, I guess, is more typical of a transaction we want to do, the kind of size. So that essentially doubled our revenues at the time. It has about 43 million of revenues. We bought that for just over 1x sales, and those are the kind of companies we're looking for. And the way we're looking to buy these companies is by a mix of cash consideration and stock in our company, locked under a 3-year lock-up agreement, and then earn out as well on top of that. Yeah, so this just wraps up the overall portfolio we got. So the brands on the top left, the markets we're operating on the top right, and then the customer types that we're focused on. So what we're looking for overall is to find white spots in the market. And the reason why we think that is relevant for our industry is that the construction industry at large is the least digitized industry in the world, but it's also the biggest one. So just to give you a flavor for that, so a 10 basis points increase in R&D spend or technology spend in our industry will mean that our underlying addressable market is going to fourfold. And that's what we're seeing now, exactly what's going on. We're experiencing growth of about 100% every quarter, and we don't think that's going to slow down. Anyone that is not growing 25%, they're losing market share. So it has to be at bare minimum 25%, and we're aiming for higher growth than that. And we can't address any of these customers without having good products and solutions, and we think we found our niche, and those are the products I talked about on the previous slide. We're spending more and more time on acquisitions. We have a full and building pipeline. Our strategy is to buy about 1 company a quarter. That's what the plan will be going forward, and probably ramp up over the next few years, but the immediate focus is about 1 a quarter. And the focus is on the UK. We want all the companies we're looking at to have at least 50 million kronor of revenues, which is quite big for us. I mean, we're touching 100 million kronor now, but that's the kind of size we're looking for. And you know, there's a lot of companies out there, so we can pick and choose a bit, which means that we narrow down our criteria, which is to make sure that we're looking at companies that have actually demonstrated growth. So that's what we're doing. We want to make sure that they're either profitable or there is a clear path to profitability. And SaaS is quite easy, actually, when you look at it. You have revenues, and then you have people, pretty much, and then you have server cost and marketing. It's not more complicated than that, actually. So it's a scale game. So as soon as you get to scale and you know what your marketing budget is, then you can quite easily determine to what extent you're going to be able to make money. So we try to identify those companies, and then we have a quite rigorous approach to how we approach them in terms of an M&A process with 5 different steps on how we approach it. And we're seeing our pipeline is focused, and we've been lucky to date, I guess, because we're not seeing a lot of other people doing it. But there is a window of opportunity at this stage for about 2-3 years, is what I'm saying, and then there's probably going to be a lot of other players thinking the same as we are. We want to buy recognized brands that have a unique market position or a product positioning, more importantly. And the idea is to use these incremental brands to sell it to the same customers. And that's what we already started seeing, is to cross-fertilize sales. And then we're looking at what we typically see in these companies is that they have a strong product, but they're underinvested in sales and marketing. And then they're spending way too much time on HR and finance overall. So we're going to pull out their finance and HR organizations and put that into our building blocks, and then invest more in them for growth. And then we want to make sure they can actually fully function as independent management team to make sure that investments in product as well as sales and marketing continues in their own entities. So that's about the company. I'll talk now briefly about the financing, or the financials rather. So in this last quarter, we had about just over 20 million of sales. So that's on the top. And then we have about 100 million of cash on our balance sheet. And then we're just about break even. And that is a choice, just to be clear. I mean, we're growing about 100% now, and we're investing ahead of growth. And we're investing ahead of growth in sales, marketing, as well as in product. We could easily embark on a completely different strategy, which would be to grow 15%, in which case we could turn off all of that growth today and make 35% EBITDA margin. But that is not the navigation at this stage. The plan right now is to make sure that we invest in growth for the future, and then in 3 or 4 years to make sure that we manage the business with profits instead. But at this stage, it's about managing it for growth. So I think you can probably see that a bit on this slide. So our growth has indeed started growing. There was a bit of a blip right when the pandemic broke out, and that was purely because it was a lot of uncertainty, and some of our customers were holding back a bit on our spending budgets. But since then, it's been an absolute explosion. It's not only for us, let me be clear, it's been for the entire industry. I think we've been outpacing the growth of the industry. But growth is building momentum, and we don't think that's going to stop. And we want to keep on growing that way. So that's the quarter-by-quarter trajectory, and that's sort of the last 12-month growth profile, which keeps on going up as well. And then recurring revenues, as I mentioned before, is important for us. It provides that level of predictability. So 80% of our revenues are now recurring. As I mentioned before, SaaS is reasonably easy. It's sales, it's people, and it's marketing. And that's what you have in our P&L. So we're investing a lot in people. That's why we're not making more money today. And then we're investing a lot in marketing, which are the 2 main cost items. And that's not going to change. Actually, for my taste here and now, we're investing too little in both. And I think one of the challenges we got actually in this market is to find good people. So we're about 100 people today. Today we're looking at hiring 26 more people, and it's hard to find them. So it's a bit of an employees market actually at this stage. So finding the right people is one of our major risks that we're navigating and making sure that we're navigating in the right way. But I'm proud about the people we're hiring. I think we're finding some really top-class people, some of the best in the industry that are excited to join us. So I'm sure we'll fill the slots, but it's more important to find the right people than the quick ones. So I think that was the financials. That was about the company. Now I'll come towards the end here actually. So talking about our targets. So these are our what my board would say are cautious financial targets, which is probably true. So we're aiming for organic growth of 20% at this stage, and then on top of that, to do acquisitions to get us to 200 million in 3 years, or 2.5 years now, actually. You know, the underlying market, I mentioned before what it takes not to lose market share. So I think what we're seeing right now is that the best-in-class peers that we got out there, they're growing sort of upper teens. We want to do better than that. So I think, you know, that's how we landed on this organic growth profile. And then on top of that, we have acquired growth. I would be very surprised and disappointed if we don't beat this, and I think we're going to beat it well ahead of target, in particular this one. But I'm obviously no promises, but that's certainly what we're aiming for as a management team. So to wrap up, so what do I think is intriguing? What is interesting about us as a company? The first one is it's just the marketplace we're operating in. So the first one is about our industry. So the industry is the largest. It's $10 trillion size. It's bigger than any one industry. You can actually add up to 3 next ones, and it's still not bigger. So it's by far the largest industry. It is the least digitized, and that is happening now. So over the next 2-3 years, it's going to be an absolute boom in our industry. And we're, you know, I tend to refer to what's going on in our industry as an industrial revolution, and that is actually what it is. It's just completely changing now. And it used to be one of these markets that were to the chosen few that had big budgets to invest in technology. That is now changing. Everyone is doing it, the small and the big, and that's obviously a big opportunity for us. And actually, if you look at all the business that we're winning, it is not about unseating incumbents. So 98% of the new business that we won this last year were all about new entrants, and that's our focus going forward. So not only is the overall industry is obviously changing a lot, as this first point says, it's also growing, the underlying industry. The UK industry on the back of COVID this year, which is our main market, 80% of our revenues, is going to be growing 28% this year alone. And that's the industry at large. What we're focused on is the residential, which is growing even more. So there's clearly a lot of growth coming. I think we demonstrated we're growing. We're going to keep on growing. We're growing more than 100%. And that's what we're going to be targeting. Acquisitions, we started seeing that. I wouldn't say that we demonstrated that fully yet. But I think that will hopefully be demonstrated here in the near term. And then recurring revenues, and as well as our products, which are really best in class, and that's what our customers believe.
Thank you so much, Gustav. I just came back from 2 weeks of moderating in Glasgow at COP26, and there's much talk about digitalization. It's the impacts, of course, connected to the measurements we have to do to get down in carbon. So from your perspective, in your sector of business, the business world, how important is this? What effects will this LCA analysis and also the climate targets have on building data's side?
It's what we're seeing in our industry now is there's 2 things. One is just to meet the everyday needs, and the other one is to meet regulations. In a lot of places, climate measures or targets are not regulated yet. It's sort of targets.
Exactly.
So what our customers are doing is going for the pieces that are regulated. So for instance, in the UK, there's a new act called the Building Safety Act. That came out of the Grenfell disaster, which was a horrible accident last year, that resulted in there being regulation. And that actually means that you have to digitize your assets. That's what our clients are focused on now more. And I think it's an interesting point, because so now we're not in this part of the world yet, but when you speak to Scandinavian, they're ahead actually. They're behind on digitization, but they're ahead on sustainability. But in the UK, which our market, is more about digitization, less about sustainability at this stage.
So, but the future is coming. I mean, there's going to be more and more pressure on data coming out of your business, of course.
Yeah, it is. I mean, it's I was actually myself quite new to this industry in the first instance, and I think everyone knows it's quite inefficient. I mean, they say every building gets built 2 or 3 times. The same data gets put in 5 or 6 times, And that results in a lot of inefficiencies. And that, a platform like ours, that's what it solves for, just take out all of those inefficiencies. And it's about using the same data set to make better decisions on the site and also for the construction process at large.
So Gustav, you mentioned the markets you're in now. What markets are next?
You know what, we're actually going to be focused on the markets now. I mean, for me, it's a bit, risk reward. And I think, we're targeting low risk, high reward. And that's where we are now. So I think over the next 2 years, we're going to focus on the markets we're in.
Mm-hmm. Any new exciting upcoming projects you want to share with the viewers?
I mean, I personally, I'm excited about the M&A track. I think that's what's going to build this to the next level. And there's a lot of great companies out there, and we're seeing all that this as a partnership rather than buying. And we were looking for management teams to come on board and join our journey to build a bigger company to create our company's needs. So that's mostly what I'm focused on.
And finding the right people.
Yes, indeed.
Well, best of luck.
Thank you so much.
Thanks for coming.
Take care.
All right, we're moving on to the next speaker. It's Ove Arnebygd. He's CEO of Netmore, and he's right and ready to get up on stage. And Netmore is an IoT operator that drives digitalization by connecting properties to a property network. It also provides open access 5G networks to asset owners and enables IoT connectivity by rolling out nationwide LORAWAN, you better pronounce it better than I do, infrastructure. The stage is yours.
Thank you so much. Yes, good morning, ladies, gentlemen, and audience joining digitally. Nice to be here today. My name, as said, is Ove Arnebygd. I'm a long timer in telecom. I spent some 25 years in telecom, as well as specializing in digitization, IoT, and lately 5G. Joined Netmore some 1 year ago as the CEO to move this company into the future. Now, the real IoT, the Internet of Things, is really here. The statistics and the data you see on the screen is saying that 127 devices are connected every second. That is the IoT as it is today. We started to talk about IoT some 20 years ago. I think the expression was actually created in 1999. And of course, IoT has progressed, and we have been talking a lot of what is it really. I mean, I think lately now with 5G is about self-driving cars and what have you. But IoT is much more than that. And I think the real and important thing here is that IoT is happening now. I think the number speaks for itself. Now, what do we do in Netmore? Well, we are an IoT operator. So we operate different networks. And I think this is kind of a key message. There are a lot of different networks. I mean, of course, we hear about, every day, the mobile networks, the 3G network, or 4G network, 5G networks. But we operate a number of different networks, not necessarily owned by ourselves. Because the trick here is to have an open ecosystem where we can have partners having networks operated by us. So as an example, a property is a network. Inside the property, there's a network. It has to be operated by someone. Used to be an IT technician that run around and fix things, but those days are coming to an end because there are so many things connected in a property that must be managed. It could be, the business automation system with heating, ventilation, air condition, elevators, fire alarms, everything to new sensors, digital locks, etc. That has to be connected and connected in a secure way. And cybersecurity is definitely one very important part in this. Today there is a lot of stuff in a property that is connected, but in a way that no one really controls. And that's where Netmore comes into play. We connect all this into one point, one node, and in a secure way. But IoT is also in the society in like a larger context. And there are sensors, and will be sensors everywhere. And these are good stuff for the development of society. You could say that, like asset tracking, where do things go and why do they disappear? It could be waste management, energy optimization, flooding control, and forest fires could be detected. All this is about Internet of Things. That's a network that we're building with a partner. So we are covering 80% of the Swedish population within a month by end of this year. So we see that anything that could and should be connected can be connected through the network that Netmore operates. And finally, the big hype, which is 5G. Everyone talks about 5G. And 5G is great. And 5G is kind of built in the macro network, as we speak. However, there are challenges to get 5G to reach indoor due to the high frequency bands that are used. And the fact is that 75% of all the traffic of mobile phone usage is happening indoor. So therefore, Netmore has specialized to be an operator of indoor 5G network. And it's a good opportunity because 5G brings an architecture that provides the possibility for having one network, a neutral host network that all operators can connect to. Now, before going a little bit more into those details, there are a few trends that are important. Digitization, and I think the previous speaker pushed that very clearly as well, is a good thing. From a sustainability point of view, there are so many use cases that deliver good things to continue that work to improve environment and sustainability in the society. Cybersecurity, I think you all heard lately in media about the breaches and ransom attacks, etc. That will continue. That will continue as we speak every day. And the more we digitize, the more we expose ourselves to the risk to be attacked. And that's where we need to protect ourselves from the very start. And 5G is, we used to say that 4G was the mobile internet for individuals, for us as people. And 5G is the Internet of Things. But 5G will also be the internet for people because we will demand more bandwidth as we go along. And that's why the indoor coverage will be important. And over time, it might even replace the Wi-Fi because 5G is a kind of controlled radio spectrum which can guarantee service level agreements in terms of performance and characteristics that Wi-Fi is more like a best effort from the internet era. So that's why 5G is also pushing very hard, and for a good reason. Now, moving into the three areas, starting with property. So for most properties are kind of not connected. The tenants are connected. We residents or enterprise commercial buildings, there are a lot of networks and we are using the internet, but the property itself, it's not connected. And that's the opportunity for Netmore. We will make sure that properties get connected in a secure way, in a cyber secure way, and by so connecting the equipment and different digital automation systems, we can operate these buildings remotely. You don't have to send people to every single building to do maintenance work. You can monitor the building remotely, monitor energy consumption, lower energy consumption, which is of course super important. But also in that context, find a way to improve the net operating income of the building, which in its turn increase the valuation of the building. So here is where digitization improves the profitability, valuation, and create something good for the environment and sustainable way forward in managing a building. We have built a platform, a modular platform, which connects the building and then allows all application suppliers, application developers to connect so that we can create an ecosystem inside the building, but also to operate the building in a secure way. The IoT network, and it pronounces LoRaWAN, right? Long range wide area network. It's a technology that we have chosen. we are fairly agnostic about technology because it's not that one technology will fix everything. And I think that is also a key message from us here today, that we are utilizing the best technology suited for the purpose. In these IoT networks, you want to connect sensors and a lot of different sensors, but it has to be in a hassle-free way. And sensors today is like this size, like an ice cream stick with a battery time of some 10 to 20 years. And that sensor could measure temperature, humidity, CO2, it could measure presence, movements, etc. And these sensors could kind of be applicable for so many different use cases. I mentioned some in the beginning, but we have a very good example like waste management. If you see these waste bins, there are sensors that will measure the full kind of the fulfill or the full what do you say the amount of waste that is in the bin, and then they will send the people to collect the bins in the right order with the bins which are full, and then saving the environment, saving resources, and actually making people doing a more efficient job. It could also be water metering, which is a super important use case. In the Swedish water system, there is a leakage of 25 to 30% of water that are not measured due to old meters and networks that are not kind of proving it's correct in the way it's built. So by detecting the water consumption for each household, we could easily then spot where is the water leaking. Also a very good way to protect our environment. There is, I said, asset tracking. There is a lot of things disappearing, and that could be everything from, the easiest thing you could think of, like whatever transportations, but also to valuable assets. And all this could be detected by these sensors that we put on this equipment. Network is together with one of our partners, Polar Structure, building this network in Sweden and then enabling anyone to connect their sensors in whatever business they wish. And that is a very good opportunity to digitize the society together with anyone that wants to be part of it. So moving into 5G, the big hype. Here, as I said, there is a kind of always looking forward, of course. There is a 5G network, there is a 6G network coming around the corner eventually, etc. But 5G is providing a lot of characteristics that we couldn't see before. For sure, it's high bandwidth. You could actually compare 5G with fiber, like a virtualized fiber. That's the capacity it provides. By doing, or to ensure that, you need to kind of get up in frequencies. And now it's getting technical here, but when you get it up to that 3.6 or even 22 gigahertz, what is it called? Then the penetration through concrete and glass is very limited. So typically, with the 5G network outside here in Stockholm, we would not have 5G signal inside this room. That's the problem. So we need to build indoor coverage. And that's a good opportunity for all the property owners to step into this ecosystem, to provide the opportunity to build one network that all operators in the macro network, in the outside network, can connect to. That will save resources, it will save cost, and it will provide a perfect environment for everyone that works in these buildings. 5G, sometimes we say these are use cases for the industry, for the mining and whatever that should be remotely controlled. But there is one industry that we tend to forget, which is the office environment. That's also an industry where we have our laptops and our iPads and iPhones and so. And that kind of industry craves a lot of bandwidth. Today we have multiple Wi-Fi networks and we're seeking new passwords and so. With 5G, outdoor, indoor, that will be a seamless experience. We can travel wherever, not searching for a Wi-Fi network, but have a high performance bandwidth to our device. So our task here in Netmore is to be the operator of these indoor 5G networks, and of course together complementing the Telias of the world that runs the network outside the buildings. The business we are now setting up is a recurring revenue business. That's the only business that we're looking for. So taking it from the left, every sensor will generate a traffic fee per month that goes to Netmore. So that will be a number of kronor per month per sensor and a battery lifetime of 10 to 20 years. So that's the recurring business that will occur. And it will be millions of sensors connected. The gateways, which is the antennas or the radio kind of equipment, also needs operation maintenance on a monthly recurring revenue base. And the same goes into properties. We will connect properties, we will operate them, and will, this property owner will subscribe to the service of cybersecurity, even their sensors, but also other services like broadband internet. It could be data collection from the existing IT systems in the building. And finally, 5G, same. 5G network, we're going to operate them and we're going to charge that on a monthly basis. And of course, these networks will remain for a very, very long time. And looking into the future, it's the indoor networks that will have a very important role. That is for sure. And outdoor, of course, there are these generations of mobile network as well as fiber, super important, but the indoor networks are key for the future. So how do we go about this? Well, we're building a strong company financially. We have a joint venture with a partner called Polar Structure. They finance the build out of the networks where we don't have networks. Where there are networks, we're kind of tagging along and we're complementing with our own network together with Polar Networks or Polar Structure. We have a strategic, very important owner called BuildData, which is a number of the biggest property companies in Sweden. Netmore is actually majority owned and controlled by property companies. So we're kind of serving their interest very much by so. We have recently have a directed equity issues to Polar as well as SBB, which you probably heard of, a very large property company. And we have an ongoing preferential right issue that will happen late this year. And by so, we are financed to set this up for a monthly recurring business because that's our objective. We know it takes some efforts to set up because we don't have any upfront cash payments, but we are financially strong back to set that business model up. Some key milestones for this year. I mentioned the network, IoT network, is complete this year in Sweden. We're now moving into UK and Ireland, targeting the same ambition. We have already successfully created organic growth in the IoT. We can see that the number of sensors are increasing every quarter. So that's nothing we sell. We don't sell the sensors. We don't create or develop sensors. We don't sell the applications, but they log on to our network and business starts to increase organically. We have some good breakthrough business with property companies like Kapman, Nordic, large property company where we digitize their buildings. Same with Diös in North Sweden, where we're going to introduce what's called individual metering, so that every tenant will pay for their electricity and the water consumption and hot water consumption. Also super important to make people aware of how much they consume and of course pay for it. And lately also with Randviken, that is now purchasing properties to digitally renovate them and try to increase the value rapidly. First 5G indoor network is in progress in Stockholm and Copenhagen. So you will hear more about that once we get in operations. And as I said, we have strong new owners coming on board. So to wrap up, I would say that we are uniquely positioned, a powerful position and structure. And we have strategic capital, not only the capital as such, but also the buildings coming in with these new owners and existing owners. We are managing networks. We don't necessarily own other networks, but we are the operator of many, many networks and more to come. Of course, we see the trends backing us, and we're happy to see that we have successfully now started the business model by recurring revenues, which is key for the valuation of Netmore to come. And already seeing a organic growth in one important area. So I'm looking forward to the future and very positive to our progress so far. So thank you so much.
Well, thank you very much, Jove. I'd like to ask you to elaborate a little bit more about the 5G indoor market. Could you just give us a little bit of a forecasting of the trajectory here? Because this sounds very interesting. And also, how about competition in this field?
Well, as I said, the 5G indoor, I mean, not everyone knows that, as I said, 75% of all the mobile traffic happens indoor. And of course, once we go indoor, we normally switch to Wi-Fi, right? And that's kind of a best effort technology. Maybe it works, maybe it doesn't. Now, post-pandemic, hopefully, we see this working behavior and pattern continue where we will trust that we have good internet connection and reliable, right? And 5G will provide that. 5G is kind of a managed radio technology that can provide the best quality and ensure quality in all the kind of digital applications that we're utilizing. With that comes, of course, new applications that we haven't seen yet. That could be virtual reality, augmented reality, that will demand a lot of bandwidth. So there is a huge need for 5G, and we see that to make this happen in a successful way, we need to fix the indoor 5G coverage quickly.
Well, thank you for elaborating a bit on this. Next step for you, what is the next move from your side?
Is to connect more properties, to build more networks, and actually following our strategy. We set the strategy a year ago, and I see that it's starting to pay off already now. So we're keeping on doing what we are set to do. Excellent.
Well, thank you very much, Jove.
Thank you.
Thank you. We now move on to the next speaker, David Wendel. He's CEO of First Venture. And First Venture invests in strong entrepreneurial teams in technology, health, and sustainability. So, you're right here. You have the floor.
Thank you very much, Katarina. Good morning, everyone. Thank you for joining me at the 2021 Naventus Tech Summit. It's really fun to be here seeing such incredible companies with great visions, and I'm honored to be presenting as one of them. My name is David Wendel. I'm the CEO of First Venture. And for the coming 15 minutes, I want to talk to you about a crucial aspect in the advancement of technology, but also one of the big stones in building the leading stars of the future technology industry. But before going there and showing you the value creation and the economic growth that First Venture has been building for the past 15 years, I want to give you a brief history and background on First Venture. So we were founded in 2006, which makes us somewhat of a veteran within our space in the Swedish VC segment. And our investment strategy differs in some senses from a lot of the other VC players out there. But to start with the basics, First Venture invests in companies within the technology, sustainability, and health industries. These are three megatrends, and the reason for us to invest in these specific industries are quite simple. One, these industries has a real chance of actually driving a positive change for humanity and for the world. And secondly, These are huge industries that are undergoing some significant and fundamental change, mainly driven by technology, as through digitalization, automation, and AI as examples. And when this happens, when multi-trillion-dollar industries are undergoing this kind of fundamental change, it invites new players, new companies to enter the scene. And if they do that kind of onboarding in the right way, the potential of growth is huge in a relatively small period of time. And that is why these areas are so interesting for us. But it's not enough just to identify these megatrends. We also need to identify the best and the brightest, the companies with the biggest growth potential within these markets. So, First Venture invests in listed and unlisted companies. We only invest in companies with high growth potential, but mainly and most importantly, we invest in strong entrepreneurial teams. And I want to pause on that for a second, because this might sound like a given way of working, but for us at First Venture, this is really the key to our investment strategy. We believe that the entrepreneurs, more than the product or the sector, is the key for success. And when we evaluate companies for new investments, we put an especially big focus on the entrepreneurs. We evaluate them based on 18 different aspects. And this evaluation process doesn't only help us to get to know the company and the entrepreneurs, it also helps us understand if we are the right investor for this company and if they are a good match for our portfolio. And the way we look at investments, mainly focusing on the entrepreneurs, it differs slightly from many of the other VC funds out there. And I think the best way of explaining this is one of our founders, Rune Nordlander, he expresses the investment strategy as looking at our investments is looking at like a marriage. If you base a marriage solely on financials, pushing money in and expecting money back, it's not going to be a very fun or healthy marriage. The way we see investments, the financial is a big part of it because that can help the company. But we want to be an active and a long-term investor. And what that means is that we're talking to each other, we discuss the future, we have a common vision, and we know where we're going. And with this dialogue, we can help the companies. We've done this journey with multiple companies throughout the years, and we can help them not only with the financing, but also with the knowledge that we've built up during the past 15 years. And I think that is a really good value proposition, both for our portfolio companies, but also for our investors. But before I jump into how we create this value and build the economic growth, I want to talk about something that I'm really proud of. And that is the fact that First Venture went public earlier this year. And there are many reasons behind our IPO. But the reason that I'm the most proud of is the fact that through First Venture, anyone can now invest in really interesting, high potential growth, unlisted companies. Because we all heard the success stories before. Swedish startups becoming unicorns, founders becoming billionaires, and investors making a lot of money in the process. But for the general public, for people like me, this has not been accessible before. I would love to have invested in Spotify during the first year when they made their first round, but that kind of investment questions goes to institutional investors and to some high net worth individuals. But by investing in First Venture, anyone can get access to these really interesting, high potential companies. And that makes me really proud. But moving on and show you what our value proposition is really about, I need to take you back and look at a typical startup or scale-up journey. So everything starts out with an idea, right? If the founders of the company has the guts to actually go for it. They go through the phases of research, then development, they launch the product, and eventually they end up in a commercialization phase, meaning selling, marketing, distribution, building the teams. The challenge for most companies is that all of these steps, they cost a lot of money. And of course, you have an initial investment from the founders, from family and friends, maybe even from incubators or government grants. But the costs, they keep consuming this initial investment at quite a steady state. So if I throw up a curve on this slide, an accumulated cash flow curve, it's quite clear that to make these advancements and to drive technology forward, you're going to have to accumulate a lot of costs. And the challenge for founders in general are that this initial investment is eaten up way before the product is ready for launch. So of course we have the angel investors. They try to secure almost like a bridge financing up until the product is ready to hit the market. And that is great. The big challenge for the founders then is that when you have the product ready, you want to reach out to the world, you need to start the commercialization phase. And that is really expensive. You need to invest in marketing, building the team, sales channels, and distributions. So it's a big dilemma here. You burnt through the initial investment, a lot of the angel investments, and now you need to invest even more to get this going. If you succeed in this shift, you can see that the cash flow curve starts to increase. And at the bottom of this valley, you have what's called the valley of death. And it sounds terrifying. For some companies it is, but if you know how to navigate it, it doesn't need to be. But the valley of death essentially is that tipping point, just before the product starts to become successful. If you manage to bend that curve, you can get some really good returns on the investment. And that is why early VC funds, like First Venture, are trying to invest in this space. If the company succeeds to do that, you have a product success. It's making more money than it's burning, which is great. And if we follow that trajectory to the northeast of this graph, we have a business success, which means that the company is not only generating money, it's generating returns for the investors. So the big question here is, what is the optimal timing for First Venture when we're looking at investments? It is this part, from the bottom of the valley of death and onwards. And the reasons for this are, well, many, but mainly this is the point where the companies need the funding the most. They're about to start the commercialization process, but they need a lot of money to do it properly. Statistics show that only 1 in 9 companies survive the valley of death. But at the same time, almost every single company out there have been in this valley, in the valley of death at some point, and often at several times. So it is crucial to get the right funding in order to make the commercialization successful, because you can't go cheap in this stage either, then you're not going to success. And if companies die in the valley of death, it's not only sad for the company, but for the world. We lose a lot of great technology that could have been developed and see the day of light. So this is really the sweet spot when we're looking at the timing of our investments. And of course, there are later kind of financing alternatives as well. So now we know that First Venture, we invest in tech, sustainability, and in health. We know that we're focusing on strong entrepreneurial teams, and we know that this is really the sweet spot that we're looking at investing in. But what does that mean in practice? I mean, it sounds like a great investment theory, but I want to show you that this actually works as well. What you see here is the current portfolio of First Venture. We have 3 listed companies, and we have 7 currently unlisted companies. The companies that are listed today, we invested in when they were unlisted, but we love them and we see great potential for the future, so we want to stay there not only up until the IPO and then leave, like some VC funds, we want to stick with them, because these are great companies with a lot of potential for the future. And I would love to present all of them, because they're all amazing. But I know that I'm starting to run out of time, so I promise that I won't. But one of the companies that I wanted to present today is Kiliaro. It's an amazing technology-based company with a fantastic team behind it. But luckily for you, we have Kiliaro here today, so I'm going to save that presentation for Eli and for the afternoon. But in order to show you our investment strategy in practice, I'll run you through 3 quick examples. And I want to start with Humble Group. So just quickly on Humble. Humble Group is a FMCG group currently consisting of 24 companies, and they sell everything from sugar reduction products to sustainable health and beauty. We invested in Humble Group back in 2011. Back then, it wasn't a Humble Group, but it was the first piece of the Humble puzzle. It was called Bain Europe. And as I started out saying, the way we invest, it's active and it's long term. You see there is not a 3-year or even a 5-year horizon. We want to stick with the companies as long as we see that there is potential. And it's active in the sense that we talk to the company, we help them evaluate strategies, we help them to get out of the valley of death and grow beyond. So that's the way we approached Humble. And given that this is 10 years ago, I kind of have the results. Is this a good investment strategy or not? Well, if we look at just the numbers, year to date, rolling 12, rolling 36, it's quite clear that Humble is onto something big. This is an amazing company and it keeps on growing. And I encourage everyone just to go into the Humble Group's website and see what they're doing. I could talk about this for hours. But just to highlight the first venture part of this, and not only talking about Humble, when we invested in Bain, the company was valued at around 8 million Swedish kronor. And if we fast forward today, with the active investments, with everything that the entrepreneurial team has done together with us through the dialogues, they are now at a valuation, a market cap on 7.6 billion. This is actually higher now. I sent in the numbers Tuesday, and it's been going up since. So this investment strategy, it's not only really interesting from an investor's point of view, but we help these companies get the best tools and knowledge in order to make these journeys. And don't get me wrong, it is the entrepreneurs driving this, but we can be a big facilitator. We've done this journey so many times with companies from different sectors, and we can be a big contributor to the journeys of the companies. The next company I want to talk about is the latest addition to our portfolio. It's Mendy. This is just a couple of weeks old. Mendy is a brain training company based on both hardware and on software. The hardware part you see on the upper left picture, it's a headband. And when you put it on, the sensors in the headband starts to analyze your oxygenated blood flow and brain activity in the frontal cortex, basically the part of the brain that makes us human. And those signals are transferred to the software, the Mendy app. And in that app, you get statistics and analysis of how your brain is working. You get training exercises. But the coolest thing for me is that I control the app solely by using my brain. And this company is just in line with what First Venture wants. It's front-end technology, it's run by a great team, and we have great hopes for the future for Mendy and Moa and the team. And last, but definitely not least, I want to talk about CombiQ. This is really a tech-driven company. We heard about the Internet of Things today. What CombiQ is doing is helping machines speak to humans. So basically, help machines that are not designed for the Internet of Things to still be connected. So the value chain begins with the industrial sensor nodes, or the ISNs. You can place this on any type of machinery, like chainsaws or up to industrial machines. And these sensors have 9 internal sensors and 3 external, and that helps gather data from these machines. That data is being sent to the base station and then up to the Combi Cloud, which is a SaaS platform that helps gather data, store data, and analyze data. And when you have that, we as humans can understand how the machines are feeling. And based on that analysis, we can prolong the life cycle of the machines, we can reduce fuel consumption or electricity consumption, and we can help maximize or optimize the operating of those machines. So it's not only a great value in terms of economic growth for the customers of CombiQ, it's also helping the world. And I think I'm going to end on that note. Thank you very much for listening, and I hope we have time for some questions as well. Thank you, everyone.
Thank you very much, David.
Thank you.
You recently started as CEO, and what skill set would you say that you bring into the company? And also, please share your vision for what you can bring in and what's going to come along for the company since you started.
Definitely. I want to start by saying that the founders, Rune Nordlander and Peter Wärmer, are still with the company. They've been doing this for 15 years with obviously an amazing track record. So they will keep on working with the investment side. We also have a really strong investment team working on a daily basis with finding and evaluating and developing the companies that we step into. From my side, it's going to be a lot to focus on driving first venture, but in terms of the investment specifically, I have a background as a business lawyer and working with growth in different companies. So I think from the legal perspective, there are a lot of regulatory questions that needs to be addressed. And that could also help us identify potential risks and help the companies avoid those risks at an early stage. And from the growth point of view, I've been working at the H&M Group and at Daniel Wellington with growth and expansion questions. And that kind of experience can also be fueled into the portfolio companies and help them reach a broader market and grow quickly. And in terms of the vision and the projects ahead, I'm not going to give you numbers on how fast we're hoping to grow, but what I can say is that in connection with the IPO we did this summer, we acquired a lot of new capital, and the plan is definitely not to let that capital be resting on a bank account. We have big plans to put that money into action. So Mendy was the latest investment we did, but I'm hoping that we have a lot more coming up.
You mentioned risk, and you also mentioned that only 1 out of 9 companies actually survive the Valley of Death passage. So how do you address risk? How do you mention you have teams that really evaluate, but could you elaborate a bit on this, please?
Definitely. I think it's about first just identifying the risk and then daring to address them, be proactive. Because as I mentioned, we've done this journey numerous times with a lot of companies. And even though every single company is unique, you still have similar challenges that you are facing. And if you're starting your first company and you start to get traction, you haven't gone through this journey before. And I think we can come in with a lot of experience and knowledge on what pitfalls to avoid and the challenges we have to face, how to address them in a proper way.
So to build on your marriage analogy, you're more like a parent here, leading the kid through a rough patch.
Sometimes they're leading us. So it's really about giving and taking.
All right. Well, best of luck and thank you for coming.
Thank you very much.
You. And now it's time for coffee. Let's meet back again at 20 after 10. Hello again. I hope you enjoyed your break and just didn't sit stuck behind your screen and moved about a bit. So you're ready to listen to the next speaker that is joining us shortly. He comes from Freja, and it is Johan Henriksson, who is CEO of Freja. And Freja is a mobile app that represents your identity in a digital form as an electronic identity. So Johan, please join me here on stage. You have the floor.
Thank you so much. So, for the next 20 minutes, I thought we would talk a little bit more about digital identities and Freja EAD, the company that I represent. My role is CEO of the company. I've been CEO of the company actually since 2002. Then the company was known as Verisec. We changed name last year to Freja, and the reason for that was our increased focus on digital identities and the SaaS service known as Freja e-Identity. My background is a business background, mostly within sales and marketing in larger American companies before this. The area that we're present in is what I would refer to as identity technology. And what is that? Well, as the picture illustrates, you can make it very simple for yourself and imagine you take your identity and you just shove it into a mobile phone. And of course, yes, that's part of what we do. However, it's so much more, because every time you log into some place, irrespective if it's e-health applications or if it's social media or if it's something else, banking, you are actually providing proof of identity somehow. And in that sense, it is the foundation of trust on the internet. Otherwise, we would just have the wild, wild west all over again. So you need that trust in order to establish a relationship with whomever you decide to have communication with. So it is the foundation of trust, and for the user, it's very much about being in control of your data and of your information. And this has, of course, become a much, much more relevant issue in the past few years, and I'll come back to that. The second thing is that identity is not only about control, it's also very much about user experience. Now, what do I mean by that? Well, every time you log into a new service, what typically happens? Well, one thing that typically happens is that you're forced to enter a bunch of information about yourself. So take parking apps. Parking apps is actually the one thing I love to hate because I have so many. Because every time I need to park somewhere else, I need a new parking app. And what happens every time I get one? I am forced to enter a bunch of information about myself. Now, wouldn't it be nice, given that I've already proved my identity to Freja, if Freja just could pass that information that this parking app requires in order to register me as a user? We can do that. That's fairly simple. Because once we've done the authentication, we can pass that attribute set or data about myself automatically along and remove the necessity of me entering that type of information. So in that sense, it's an integral part of the user experience when you look at it that way. This area is fast growing, and the reason, of course, is those macro trends that I've put on this picture. Digitalization, we saw an increase of that during the pandemic. We're seeing the continued digitalization across the board in every single industry. It will affect everybody, and in that sense, our lives are becoming increasingly more digital, and the need for me to provide data about myself and proof of identity is increasing all the time. The cloud trend, of course, it's part of this, and we are a SaaS service or identity as a service company. But the third point, I think, is even more interesting to stop and reflect upon, because it's about privacy. Now, privacy is something that the big tech, the American companies typically really have very little respect for. And that's what we've seen across the board with the Googles, the Facebooks, and so on. And that's really why you see the legislator across Europe reacting to the behavior that they've shown for the past few years. That's why we have the advent of GDPR. That's why we answer the questions about cookies. That's why the payment industry and PSD2 is so concerned about proving your identity in conjunction with payments, for instance. So the legislator is reacting towards this, and now you start seeing the reaction from the likes of Apple with their latest iOS, removing the ability to track users across platforms, and this is of course affecting the industry as well. So privacy and being able to control my own identity and the data related to that and provide consent for use with that data is becoming so much more important. And Freja EID is basically all of these things. It is identity as a service. And we use validated user identity or data as the basic premise for the platform. What do I mean by that? Well, validated user identity basically means that anything that we put in our database has been validated against an official register or against some other method that we can control that information against. And the reason for that is that we don't want self-entered data. We don't want subjective data in there. We want objective data that we can make decisions upon. What we're doing right now is building relationship and habit with our users. That's basically what's happening when our users come into our platform and start using this for physical identification or for identification towards a number of different services. And the idea, of course, is to provide increasingly wallet features connected to the Freja EID platform. And this goes very much in line with the eIDAS framework and the ideas that the European Union has for the digital identity of the future, providing different features such as payment or other things that are related to identity. We are today certified by the Swedish government, and we are also approved by the EU in terms of having gone through the peer review just recently. And the peer review in conjunction with eIDAS actually means that we had 20 countries, I think it was exactly, that actually looked through every single process and technology that we have in place in order to guarantee the integrity of our data and the processes related to the issuance of digital identities. So I think it's safe to say that we have a number of people looking at what we're doing and making sure that we're doing it in the correct way. Now, the eIDAS news that we presented a few weeks ago in itself will take time, because eIDAS will take time in order to actually implement the Swedish eIDs across Europe. But that's basically what it means. We're approved for use across Europe, and it means that most of the other European countries will have to adopt or support the Swedish e-identities. And that's nice, but it's not going to generate a whole lot of revenue in terms of that. But it is a very nice marketplace in terms of we have a number of European countries that don't have an electronic e-identity, and now they're looking at, well, these people who have just been through this peer review, what can we do together with them? So for me, it's just as much about sales and marketing as it actually is about future revenue. Now, what can I do with Freja once I have it? And these are, of course, very simplified examples, but I just want to provide you with an idea of different ways of using the platform. I mentioned one of them in conjunction with my example with the parking apps, and that's sign up. And that's basically the first time you use a service. And it doesn't have to be an app. It could be a web-based form or something else, but it's really about, I'm interested in taking part of an offer or being part of a community or doing something, and that community or company is requiring information about myself. Now, on the extreme end, of course, we have the banking industry requiring a rigorous KYC process, and that's basically what we're offering, all the way through to just providing name, surname, and maybe email address and telephone number. So there's quite a large difference between what different companies need. And of course, we're going to charge very different depending on what the level of security is in relation to that data and the amount of data, of course. Then we have the area that we call Interact. Interact being basically your daily use. So every time I log in to the tax authority using Freja in Sweden, or 1177 for e-health or things like that, that's interactions. That's just daily use. If I sign a contract, for instance, that's daily use. If I take my mobile phone and I use it to pick up a parcel at PostNord's ombud, which I can't even begin to translate into English, then I can use my Freja EID to actually prove my identity with the cashier. Because that's one of the features in the solution. So that's the interact portion. And typically this is a transaction-based business model because it's dependent on how often our users do something. We have the checkout feature, which is of course often related to payments, because that's often what happens during checkout. And it can be approving identity in conjunction with a payment. So for instance, to support the PSD2 requirements, credit card companies need an additional level of strong customer authentication when you do a payment. That's what we can do in the checkout. But of course, signing a contract could be another way of doing a checkout. Or actually, if you want to imagine that you're having parcel delivered at home with DHL or some other last mile carrier, then providing your identity and picking up that parcel could be a checkout in a way of putting it. The fourth box is something that will be implemented actually during this quarter and released during Q1. It's our engage feature, and that's really the beginning of where you see our wallet developing into something much more than it was previously. Right now, it's a fairly static feature that we've experimented with for the past year, and it's really about seeing how do our users react when we have something called Explore in the app, actually clicking into that and checking new services. And the idea behind it from the beginning was actually to provide a vehicle for us to affect the number of transactions and the engagement with the user, because we need a way to communicate with our users in order to raise the awareness with the user community, but also raise the number of transactions. Now, we realized along the way that we could do more than that, because Engage is really about also discovering new features. So during the summer, we experimented with a number of different companies, one of them actually renting out apartments in Sweden, and we had enormous success in those tests, because as it turned out, a lot of our users were actually in the app, exploring this feature, and clicking through, reading about these apartments, for instance. So you can start seeing what we can do with that, because suddenly we can actually charge for those click-throughs. It's something different than just logging in. It's actually discovering new services as well. So, some picture examples of this. This is the way we perceive login. It's not username and password, of course. It's QR codes, which are partly more safe, but also very much more easy to use for the user. Leave your ideas home was one of the examples I took in relation to the post, and that's basically the feature that allows me to use my mobile phone instead of digging into my purse and finding my passport or driver's license or other proof of identity in the physical world. So this is a replacement for that. This is what we're actually seeing a giant uptake with the younger portion of the market. This is 16 to 25-year-olds. They're used to running around with passports. And you're not 16 to 25-year-olds, so you probably have driver's license, but we're talking about a completely different subset of users here. And they love this, because suddenly they can leave that passport at home and just use their mobile phone that they also can use for payments and things like that. The employee ID feature was one of the first that we released within the wallet idea. Basically, it's a way of putting your employee identity alongside with your private identity. So your company can issue an employee ID on the back of a private ID. And why would you want to do that? Well, in very many cases, especially within the public sector, you want to have a difference between your private ID and your employment ID, because you're actually making decisions that may or may not be controversial, actually, that may expose you to threats. So you want your employee ID to be the one that actually is visible on a decision or on a contract or something else. So this is an extremely important thing within the public sector, but works just as well for, let's say, a sports club or anything else. It's basically the same thing. Face recognition, we do have a face. During registration, we will read your face and we will compare it to that face on the ID document that you presented. Now, what does that mean? Well, in the extension, I don't actually believe that this will be the sole carrier of my identity. That would be naive and probably a little bit stupid. I actually think that we will have different ways of providing identity. My face being one of them, which is very practical in some instances. For instance, in the store environment where we want to check that I am me and know my age for selling certain goods, for instance. That's a very good example. Or within the building industry, if I come carrying heavy things and cannot pick up something, then my face is a very good way of identifying. Or in a hospital environment, the same thing applies when I don't want to use my hands because I've just spent 20 minutes cleaning them. So there's a bunch of use cases where face, for instance, can be an interesting way of identifying yourself. So I think we'll see different use cases for this along the way. Maybe we'll look at watches or glasses or something else in the future, I don't know. But I know that the data that resides within the platform, that's the value that we bring to the market. Today we have 356 services connected today. So there are 356 places where you actually can use Freja today. And I mentioned a couple of them, the tax authority, for instance, a few gambling companies such as ATG or Svenska Spel are examples here in Sweden. Pensionsmyndigheten is another one of these large public sector entities. But it's growing for every day. I think the last quarters we've had about 40 to 50 new services signing up with us on a quarterly basis, and that's growing regularly. If we look at the other key KPIs that you can follow. We've chosen 4 of them. We've chosen users, which has grown dramatically in the past year. We decided not to focus on users initially because we wanted to make sure that we had a subset of use cases that users would find attractive before we attracted users. So we did a lot of work on that. Beginning of this year, we decided, let's shift. Now we're focused on users. We've been growing around 49% on average for the past quarters, about 60% actually from Q2 to Q3. So that was quite dramatic growth as well. And in line with this, we expect to end up around 450,000 or somewhere close to 500,000 by the end of this year. So quite rapid growth in user adoption and a lot of young people representing these users right now. Agreements I talked about. Transactions are of course important because we don't just want new users. We want actually users that use the solution as well. So that's why we have that measure. And revenues, of course, is coming up, but from a very low level, and I acknowledge that. It's nothing I can, make disappear, but the fact is that we started this journey 2017 and got this approved 2018. Building a national infrastructure of identities is not a very simple thing to do, but we've managed very well, and we are delivering now on the promises that I made 2 years ago, 1 year ago, and we're continuing to do exactly what we set out to do. And to our help right now, to be fair, we have this network effect because every time we add a relying party, every time we add a service, we attract a new subset of users. And thanks to our user base growing, of course, a lot of services are interested in signing contracts as well. So these are driving each other, which is extremely important for us going forward because it increases the speed of rolling out Freja as a platform. And basically, just to end up on the revenue and how we make money, I've alluded to it in different ways, but there are basically 2 ways to make money that we use. One is transaction-based in relation to the user. So when the user does something, logs in or does some proof of identity, there is a transaction. We charge for those transactions. On the other side, we also have the subscription model, which is at the base. That's actually the biggest proportion of the revenue coming from Freja today is subscription-based, and those contracts are typically 36 months long. So what you see as revenue today, you should remember that that's a slice of that very, very long contract because those are subscription-based revenue, and that's growing fairly quickly as well. And just to mention something about the engage feature and coming back to that, the reason why we're doing that, of course, is that we realize that people are paying quite a lot for clicks today. So these are just examples from cell phone companies between 5 and 50 kronor just for a click to arrive at that site, or the gambling companies that are paying between 60 and 700 kronor just for a click. Now, what we can provide is just not a click, it's actually a user registration. That's something completely different, and we can do it with user consent, and I think that makes all the difference. So key takeaways, sorry. We have a very strong growth potential, and I think we're showing that also in our numbers. What we talked about now was Sweden, but of course this works just as well in the rest of Europe, which EIDAS certification proves. And there is a very attractive long-term financial profile because we can combine the subscription model with transaction-based model as well. Thank you.
Thank you very much, Johan. Unfortunately, no time for questions.
What?
Yes, you were very lengthy. Yes, you're on overtime.
I just looked at, I thought that was my time.
Sorry.
Sorry, okay.
All right, we have a tight schedule. We have lots of, well,
Okay.
we have more people lined up that we want to listen to, but this was a great presentation, so I think most of my questions were actually answered already in the presentation. So now, Awardit is the next company coming up here on stage, and it's my pleasure to welcome Niklas Lundqvist, CEO. And Awardit is a leading operator of customer clubs, loyalty programs, sales incentive programs, digital point currencies, and reward shops.
That's correct.
You have the floor.
Thank you. So my name is Niklas Lundqvist. I'm the founder and CEO of Awardit, which I've been running now for a little bit more than 20 years. So what's worth knowing about loyalty programs and point currencies that I don't know, I'm probably the number one source. Anyways, did you know that if you aggregate the value of all point-based loyalty currencies in the world, you would probably have one of the top 10 currencies from a value perspective. I don't know if this is true actually, but I read it somewhere on the internet. I do know that it's very good business. Awardit in brief. Today, we're the largest company and platform for setting up and running loyalty programs, incentive programs, and gift card programs in the Nordics. If you're looking at our revenue going forward, without any organic growth, without further acquisitions, next 12 months we should be around 600 million. But we're looking at very high organic growth at this time, and we expect to add further acquisitions. We provide a software as a service toolbox for setting up and running all these types of programs. So simply put it, we're a one-stop shop for this. We help our customers with the strategy for the concept. We set it up and design it on our technical platforms, and we operate it on our platforms. We also, very importantly, we provide content, and content in the form of marketplaces for loyalty points, for closed deal shops, for gift cards, and so on. And this is actually the main part of the business. Probably 70% of our revenue is transaction-based within the programs that we run and through our distribution channels. Like I said, we're seeing very strong organic growth right now and rising profitability. The business itself, from an organizational perspective, is divided up into two business areas, loyalty and gift cards. Loyalty, we divide up into business to consumer and business to business. And our long-term ambition is to become one of the absolute leaders on the European market. And when I say long-term, from my perspective, it's a matter of 3 to 5 years to reach this. And we'll reach this through further acquisitions and through growing faster than the market. And we managed to do so now for many years. Since we took the company public in 2017, in December, we closed 9 transactions. We acquired 9 competitors and businesses within our area. And we're currently working on the 10th, which I believe will be the most exciting so far. It's a company called Premier Direct. It's one of the German leaders in this field. So we're beginning a bridge hold on the German market through that acquisition, which we will expect to continue acquiring other businesses from. This year we've closed 2 transactions. MBXB, a Danish group, that's the Nordic leader in third-party distribution of gift cards. So if you go into a Coop shop or a 7-Eleven, Circle K, ATG, whatever, we control 90% of that market. When you buy a gift card, it's bought on top of our platform, and we earn commissions on all the sales. Looking at Awardit from a customer perspective, why do you retain us? Well, we work on the revenue side of our customers, so they want to achieve a greater share of their customers' wallets. They want to reduce price and discount focus. They want to increase customer lifetime value and reduce churn. They also want to establish more cost and responsive marketing and customer communication. And every single krona you spend on a loyalty program, gift card program, you can expect a higher turnover on than if you invested in mass marketing. We also run incentive programs. And incentive programs, they're the same type of drivers, but it's sort of a behavioral finance. You stimulate your own personnel, your own employees, or a reseller network by rewarding results, activity, competence, and engagement. I don't spend very much time looking at the markets, and doing research. I mainly focus on sales. But we are exposed to massive markets, and the gift card market, it's expected to grow very well over the next few years. The same applies for the loyalty market. But we expect to grow faster, and we are growing faster organically. If you look at our business model, it's a bit different between the different areas, but when it comes to loyalty division, we charge setup fees for configuring our platform and branding it under our customers' graphic profiles and trademarks. It's a white label solution, essentially. We charge monthly fee for access to the platform, web distributed. We charge we do business within the program, so we run the loyalty marketplaces. So when you go into SAS Your Bonus and you redeem your points for a digital gift card or an iPhone, we are behind that transaction and we run the platform for SAS. And we obviously have a margin on all such transactions, regardless of it's a digital product or a physical product. When it comes to the gift card segment, we control the whole vertical. So we provide the largest processing platform in the Nordics. And by a processing platform, I mean a technical platform to issue and to redeem gift cards. That's also provided on software as a service basis. There we charge a monthly fee, setup fee, a monthly fee. And we also charge loading fees. So when a gift card at, for instance, Systembolaget is loaded, then we have a fixed fee on that transaction. And in some cases, we charge a variable fee on basis of the amount being loaded on top of the card. And when I say card, it may as well be a digital code, because the trend is obviously that it's 100% digital. We also run some private label programs. The most successful being Super Gift. It's a gift card concept that Awardit owns. We launched it in the middle of COVID. It's a multi-brand gift card, so you can you get a digital code that you can redeem for 100 plus other gift card brands. And we launched that mid-2020, and at the end of October, we had sales of approximately 100 million krona from that product. And we did that without investing one single krona in tech, because we control the platform. We haven't invested in one single extra employee, because we have the platform and the organization. And no marketing, because we control the channels, loyalty programs, third-party distribution channels offline, and closed deal shops. We reach more than 15 million consumers in the Nordics through our platforms that we run for our customers. But when running private label programs, we not only have the regular gross margin, we also earn an indirect profit from breakage, because the money ends up on our balance sheet when we sell these gift cards. And the validity period can be 1 to 2 years. So if a gift card then expires without having been fully redeemed, we'll be earning an extra profit, obviously. And that we call breakage. Partnerships. We have a network of 500 plus external partners that, let's say that you run a loyalty program on top of our platform, and you want to make it possible for your members to earn points not only from your business, but from a bunch of external partners as an added value to the program. We enable that. We have the network, we tailor it for the need of our customers, and we track all the transactions based on affiliate networks, ad hoc integrations, and open banking. Open banking is something we launched this year. It's a very effective way to track transactions in these networks because we don't need to do any technical integration in ERP system and point of sale systems. So we published our Q3 last Friday, and we've seen a growth rate in the third quarter of 110%. 24% of that is organic. Actually, if you adjust it for non-recurring revenues that we had at the third quarter last year, it's around 60% organic. We saw an increase of a profit of 96%, 74% being organic. We saw an improving gross margin. We're currently working hard with integrating our latest acquisition, which we closed in July. It's a company called the Insplorion company. And it's interesting to note that their OPEX is twice as high as Awardit, so we expect a lot of cost-saving synergies there. We have an ongoing acquisition, Premier Direct in Germany. We've concluded the due diligence phase, and we expect that we'll be able to close the transaction in probably December. What we see, we're negotiating the SPA right now. Supergift, like I said, it's developing very well. We're beginning to see breakage in the third quarter. We saw 0.4 million. Based on that breakage percentage we saw in the third quarter, and you apply it to the sales that were made in the fourth quarter last year, and looking at the fourth quarter this year, we expect 2.6 million to be added to our profit from breakage solely. We still have some parts of our business that are COVID effective, mainly the Danish group, MBXP. It's lagging a bit, so it's very exciting to follow the development of that during the fourth quarter, because in mid-October we were back on pre-COVID levels there. We expect that our latest acquisition will bring in around 4 to 6 million in the fourth quarter on an EBITDA level. Like I said, gross margin has been improving over time. The same applies for our EBITDA margin, and our adjusted EBITDA margin third quarter last year compared to this year was up from around 12 to 17%. A few words about Premier. It's one of the leading loyalty companies on the German market. It's a very strategic acquisition for us. Like I said, we hope to close it. And we'll be adding hundreds of customers on the German market through that acquisition. And we believe that we'll be able to continue building with new acquisitions on top of that. They had a revenue of 18.7 million euros last year and a profit of around 1.2. This year is expected around 20 million in turnover and probably a bit less than 2 million in EBITDA. It's debt-free, 35 employees. We're paying 17.5 million euros. On an average, for the acquisitions we've made, we paid around 8 to 9 times the EBITDA. To give you a feeling of how we pay for this transaction, according to the term sheet, it's 3.5 million euros in Awardit stock, which is obviously the most valuable asset that I have. So it's it's a great honor to be paid in Awardit shares. We're paying 14 million in cash, and we expect that we can leverage around 50% of that through bank loan. So, yeah, going forward, continued high organic growth. Actually, our growth in the first months of the fourth quarter in October was 113%. And normally, we're very heavy on the last quarter in the group. Normally, the turnover in the fourth quarter is 50% higher than in the third quarter. So just to give you an idea what can happen. We've seen a very massive record amount of new customers during the last year, especially in the gift card segment. And yeah, like I said, our aim is to become one of the absolute European leaders through further acquisitions. So I spend most of my time on transactions, actually, and I hope to be able to continue to do that. Thanks.
Thank you very much, Niklas.
Thank you.
A question, are you worried that more and more consumers are turning to larger retail platforms like Amazon instead of standalone retailers, and how is that affecting you?
Well, not really. I mean, we haven't seen that, and obviously it would actually make our business case better towards all the, the type of commerce clients that we have, because they need to invest in customer loyalty programs. The banks need to invest in customer loyalty programs to retain customers to their credit cards and so on. So they need us.
Okay, so it's not a problem. Terrific. How about ethical complications when it comes to using services, for instance, like Klarna, and similar companies? Are there any ethical complications referring to that? I mean, people, setting themselves up for debt, maybe?
Yeah, that could be, but that's not really part of our business. Although Klarna is a client of ours, we only do a limited amount of services for them. But we're not into the credit business.
So it's not really a problem at all.
But we have quite a few credit card companies as customers that we run their loyalty programs.
All right.
So, all right.
Well, thank you very much,
Okay.
Niklas. Thank you. Moving on to Greater Than, we will now be listening to Sten Forsecke, who's founder of Greater Than. That provides artificial intelligence that prices risk per car in real time, helping auto insurance carriers to improve loss ratio and supporting automotive OEMs with behavioral-based pricing for new mobility. The floor is yours.
Thank you very much. Thank you. Thank you for having me today. Hi, I'm Sten Forsecke. I'm the founder of Greater Than. I'm going to give you a bit of an insight and a deep dive to some extent into InsurTech, which is the area we operate in, and also a deep dive into Greater Than, what we actually do for the mobility world. We are a data analytics company that with help of AI predict the risk or probability of a car accident, and we do that in real time. With that knowledge, we provide world-leading pricing components to the auto insurance industry. We are in operations in Stockholm, Singapore, Tokyo, Palo Alto in the US, London and Brussels. To give you a flavor of the InsurTech space, this is a European picture, not including France, not including UK, not including Germany. It's very crowded. It's very, very crowded, and it is a space that is growing rapidly across the globe. InsurTech is a new fintech. In this respect, I'm very happy to see that we are listed now as the world's most innovative tech provider disrupting the insurance industry. We are an Insurtech 100. So that's a bit of us. Our vision is to make auto insurance become a contributor to less road fatalities and less CO2 emissions on the roads. Current business model is counterproductive to those targets. All models that are pooled priced, we share the cost of everything. Makes everybody on that sample a little bit worse. We behave a little bit worse than we should have to do. Causes unnecessary road accidents, unnecessary road CO2 pollution. Currently, 35,000 people get injured, seriously injured, every day on the roads. 7,000 of those you can derive to this business model. 7,000 people badly injured every day on the globe at the cost of $1.2 billion. Road fatalities is not that expensive, but road injuries are very, very expensive. So that's our vision, to make this industry become a contributor to less road fatalities and less road injuries and less climate unfriendly. The business model, we are a SaaS. We provide service to these industries on a monthly revenue basis per car connected to our platform. It's very simple. The strategy, yes, be outperform on quality and precision on pricing the actual cost of an insurance. We currently operate, we have 3 product segments that we sell to 4 interlinked industries, 4 verticals. A strategy has been to sort of nail the large account in each of those verticals. We all know Toyota. We do the platform for car sharing for Toyota in Japan. New mobility, Karo is the hottest platform there is in APAC. On insurance, we do partner with MSIG, Mitsui Sumitomo in Japan. We are their digital strategy when it comes down to auto insurance. And on fleets, we do operate or partner with Onto in the UK. They've been growing they are an EV subscription-based business. And they've been growing from 1,000 cars to 6,000 in less than 2 years, hitting 15,000 cars next year in UK only. Today, I'm going to focus on our insurance offerings, so the AI pricing components, because those are the core, the heart of our offerings. First of all, motor insurance market under enormous pressure to change. Motor insurance is mandatory in most countries on the earth. The market is over $1,000 billion. Loss ratio, which is sort of the cost you pay in damages, is 95%, if I'm kind. There are pockets on this earth where auto insurance is profitable. Scandinavia is one place, Switzerland is another. Apart from that, it's a loss-making machine. And the market is growing roughly 6% per year. Mega trends in this space. The climate. Also, insurance industry has came to the conclusion we need to do something to help fight the climate change. And that helps us. Road injuries. It has become too expensive and it's not sustainable that 3,500 people dies every day on the road and 35,000 gets badly injured every day on the road and 350,000 gets hurt every day on the road. It's not sustainable. Together with United Nations and FIA are we running a project called Smart Driving Challenge to do something about that, the road fatalities. Micromobility. I mean, the car ownership is shifting so rapidly. As Toyota says, they won't sell a car in a traditional way in 5 to 10 years. They will rent it, they will subscribe it, they will share it. Car ownership is changing rapidly. Now it's happening. And only Insurtech can fix this. We need to play a role here to make this change happen. Trends, refined underwriting. Underwriting is how we sell an insurance, how we price an insurance, and what margin you want on an insurance. Like I said, Tesla is taking the lead here. Tesla is scrapping all sort of the old traditional components, how to price an insurance. There is 3 components needed. You need a zip code, you need a car value, and you need a driver behavior. And the driver behavior is 80% of underwriting, and we provide that component with a precision unheard of, and at a cost unheard of as well. So, and also another trend, pretty much driven by the pandemic, usage-based. Insurance, auto insurance, is one of the few pockets where we still pay a fixed price per year for something you may not use. It's absolutely unheard of in all other aspects and industries. That is changing, customer-driven, both from commercial customers and consumers. And predictive risk understanding. The whole insurance is based on history today. Well, we had 3 fires on Östermalm last year, so that's how we price going forward. That is absolutely, this industry needs predictive insights. The need to be able to predict what's going to happen, not what happened. Only Insurtech can fix this. And we are in the right spot to help them fix all this and support these trends. What we do, we deliver a new level of risk data, predictive risk data, per individual driver, not only per individual car, per driver. We can tell real time. I need 1 kilometer driving, then I can tell who you are. And I can tell you what is the cost of your insurance for this carrier going forward the next 12 months. So how can we do this? And I took this experiment or this benchmark from an article I read in a US magazine. Google self-driving car initiative called Waymo, they was bragging and said, well, we have the most experienced AI driver in the world. So, and they revealed all the figures, and I said, well, let's benchmark to us. They have driven 32 million kilometers on the road, public roads. That, in their terms, equates to 1,400 man-hours of real driving experience. And they have been in 1 country, and they've been in 25 cities, and the valuation per kilometer driven here is $938. So I looked at us. We have done 19.5 billion kilometers on public roads. 19.5 billion kilometers on driving on public roads. That equates to 855,000 man-years of driving experience. On the learning curve, you start to learn after 1 to 5 billion kilometers. The start of learning curve. We've been in 106 countries, 1,600 cities. Unfortunately, our evaluation doesn't match the Waymo initiative here, but we'll get there. This is important for insurance because they want to see that we have the competence, the quality to actually price risk. And risk is core of the business. So what it does, no matter what car you have out there, I price the risk individually. The cost for this car should be 100 and this is 200 due to the behavior of that particular driver. So now you have a price going forward. Now you know exactly how you should price that insurance. So it's simple. And how it works, I need data from, and we have been agnostic how we acquire data today. We take it from all sources that are available. Car telematics, the car systems, smartphones. We suck all data up and send it to our cloud, we process it, and return the pricing component to the insurance carrier real time, almost real time. So it's very easy, it's very seamless. And of course, every trip is different, so each trip gets its own DNA. The DNA is matched in our database where we currently, due to this 855,000 years of man experience, we have discovered 7 billion ways, different ways of driving a car. And the AI has been trained to understand what is the cost of those driving patterns. So it just lots of work and experience into this. And of course, when the right price is everything is vital. The right price gives you lower cost, claims cost, gives you higher customer retention, proven. So pricing is everything for insurance as well as all other industries. So with that, We are also the finalist of being elected the Automotive AI Service of the Year in the US, top 4 in the world on automotive AI services. So thank you very much. We have time for questions.
Yes, we do. Excellent. So, talking about trends and
Yeah.
mobility, the mega trends that really will be affecting you. You spoke of car sharing. Is that the biggest
Yeah.
shift
Yeah,
here?
car ownership as a whole is the biggest trend there is. And we've been talking about the sharing economy for 10 years now. Now it's happening. It's happening now. I can see it growing.
So when you speak of the AI being able to identify the behavior of a driver, what happens when we're going to be sharing cars?
Right, and that's what drives our business. We have clients now in Singapore. They have 1,000 cars that 25,000 people shares. And in traditional insurance, you can't price that risk because you have no clue. We price every trip real time. Perfect.
So the challenges ahead that is connected to this, and also, of course, other aspects of the automotive industry, for instance, climate change that you addressed. What are the major challenges?
For us, currently, distribution is our challenge, to reach out to all the carriers across the globe and automotive manufacturers. And as we are also, which I didn't mention here, we also track the personalized CO2 imprint. We contribute to the CO2 reduction program. Also, when you're talking EVs, you get more mileage out of the battery. So we are in the right spot.
Could you elaborate a bit on this? Because I'm not quite sure that I completely get this. How do you sort of contribute to the reduction of CO2 emissions?
Right. We have a driving pattern. That driving pattern has an implication on risk, also my probability to be involved in an accident. But it also has an implication on the CO2, the fuel consumption or electricity consumption.
So it's basically connected to eco-driving techniques.
It is. Yeah, and I can track sort of your behavior to what it has implications on the battery consumption or on the fuel consumption.
But in many cases, there's more than one person driving a car. And it might be insured to one of the drivers. For instance, I have more of an eco-driver than my husband. We've noted this.
Yeah.
Yes. So how do you navigate around this?
When we have those kind of solutions out there, we use your smartphone to identify who is driving. So I can connect your CO2 imprint to you and to your husband, for us.
So then you need a loyalty program, referring back to the
Right.
to the other speaker.
Yeah, so we do incentive programs, based on safe driving and eco-friendly driving, so you get loyalty points for those two elements.
Exciting. Well, best of luck.
Thank you very much.
In reaching out. That was your primary concern, right? To be able to have the reach. Well, thanks so much.
Thank you very much. Thank you.
So now we move on to a panel discussion. We're going to talk about the topic that's framed like this. In an intensive IPO market, also with a very strong stock market climate, we're going to talk about the power of innovation here in the Nordic region, taking niche companies to a global position, and also how a marketplace like NASDAQ promotes the success of technology companies like we're talking about here today. So, waiting here next to me is Per Anjansson, board member at AAC Clyde Space. Please take a seat. And you're also CFO and investment director at Karolinska Development. Welcome. And we met you already, David Wendel, CEO at First Venture. Please sit next to Per here.
Thank you.
And also we have with us Håkan Sjögren, managing director Listings Sweden at NASDAQ.
Yep.
Excellent. All right. So let's start talking about Stockholm a bit. How come that Stockholm has been able to become such a bright star in this field when it comes to unprecedented numbers of listings and equity financing? Would you like to start with this?
Yeah, of course. I think we can't just pat our own shoulders all the time, but I think we have to thank a little bit the politicians in the early 80s when they decided that we should have some sort of tax break on capital gains and with the Allemansfonder, and that gave Sweden a head start to contrary to other countries with getting people interested in buying into stocks, buying into the market. And that has helped all these companies and gave us this fantastic ecosystem that we have today.
And we've talked about this before here at the Naventus events. Okay. And how can we sort of make this happen, or what are the implications of this for other markets? We are a bright star when it comes to this. How can we inspire other markets to
We have
follow
already
suit?
done that. I've been sitting with one of the ministers in Denmark, and they came to us maybe 5-6 years ago and asked, how the hell, can you have this fantastic market here and you are taking our Danish company and list them in Stockholm? And this was one of the things, and they actually put in a sort of ISK, investeringssparkonto, in Denmark as well, though they limited it to 50,000 kroner, which is not really what we have, but it was a start to get this going. And I mean, since Nasdaq is running the first North market, both in Finland and Denmark as well, so we know the differences. We have exactly the same rules, so it's not more difficult to take a company like these guys to Nasdaq in Helsinki or in Copenhagen. But all the things around are a little bit more, or very much more, developed in Sweden.
Well, thank you for your perspective here. And David, how about your perspective on this question?
Well, I completely agree with the government regulations that helped boost this, as well as during the 90s, where we had the incentives of getting home computers. Boosting entrepreneurship was a big thing. But for me, that I've been living abroad for quite some time in the US and the Middle East, I relocated back to Sweden about 1.5 years ago. And one thing that struck me moving back was the size of Sweden. It's relatively small, which is a great thing, I believe, when it comes to entrepreneurship. Because big global companies tend to overlook Sweden in their expansion phase. We can just look at Amazon entering quite recently. And I think that's a fuel for entrepreneurship. We miss that kind of innovation, and if it doesn't come to us, we make it ourselves. And I also think that the size of Sweden helps in another, more of a mental aspect. And that is, most of us, we know people that are entrepreneurs, so friends that know people that are entrepreneurs. We can run into Jakob de Geer at the street or Daniel Ek at a restaurant. And just the fact that we get to see these people, they are not fictional entrepreneurs sitting somewhere in Silicon Valley hiding, that is a big mental boost that helps us take the step and really have the courage to move on to this. And then, of course, the system around it, the exit possibilities through an IPO or through other types of exits, that could also fuel reinvestments in companies. So I think the climate here is fantastic.
Thank you, David. Would you like to add, Per?
I think you covered most of the things. It's kind of a Hollywood effect where you get and now you can look back and see the reasons why we ended up here. And I think you mentioned most of those. One thing maybe is the collaboration, also politically, from Telia and going back to 70s and 80s, that they actually bought innovation from to foster the supply of new innovation and help small companies. Ericsson was in there as well, and that has continued. The collaboration between industry and academia is actually exceptionally good in Sweden, I would say. That's something we hear from elsewhere as well. But this Hollywood effect, if you call it that, is that now you have all these reinforcing cycles happening with entrepreneurs, investors, regulations in the market, access to capital, and actually people who have done it and gone global with their companies know how to do that, so we got the confidence. It's difficult to just copy that. It takes time.
So would you say that Sweden is able to keep our status as a very well-renowned tech market? Or what are the challenges here to this continuous high status? Would you like to continue, Pat?
I think going back to this interest to invest in risky companies, it's because the lower tax with ISK, for instance, and also the low interest rates, of course. And if you take away the fuel, that is the capital, by limiting, for instance, which is now discussed politically, the ISK and so on, I think that will be a major effect, actually.
So that is the major challenge.
Well, regulations such as hampering that, also making it more difficult for people coming to Sweden, talent to come here. It's difficult to find housing in Stockholm. It's too expensive. or difficult to find, basically, and it's difficult to actually get a permit to stay. Such things are actually stopping this a bit.
And this is, of course, involves politics moving forward. So, Håkan, your take on this?
Yeah, but I think it's totally right. I mean, the politics is the thing that could change this head start that we have had, and because you talked about the ecosystem, and what we see when we compare us to other countries. I mean, we are small, as you said. My colleagues in the US last year, they couldn't believe it when we listed so many companies. It was like almost as many as they did, and they are 30 times bigger. And that's pretty amazing to see. Now they have outrun us this year because the IPO market is very good there as well. But if we compare us to similar countries in the Nordics and in Europe, we have so many smaller and medium-sized advisory firm that can help. I mean, we have this Naventus guys here, for example. You don't see that in many other countries. They have their big investment banks, and sometimes you can't cover the whole part. So we have these certified advisors, corporate finance firms that will help these smaller firms, and that's difficult when you are a big investment bank to do this. So I think we have a very good setup right now, and something that can destroy it is that if you like you said, lower the ISK, for example, or something. I mean, it's more these things.
Would you like to add, David?
Yeah, I think I completely agree with Per. I think the big thing threatening this could be the politics and regulations. We all know about Tayyab Shabab, a very gifted developer that had to leave Sweden because of a clerical error, which was very unfortunate. And we started out this day hearing about one of the biggest challenges for Swedish companies is attracting talent. And everything from housing and the possibility to come here, that could threaten the entrepreneurial climate. And we have a perfect infrastructure right now. So it's very important to just protect that and make sure that everyone can come here.
So also here in the Nordics, we have a very strong tradition of smaller companies going public. And of course, this is what you're doing quite a lot in your company. And this has also enabled further development of development of unproven businesses and technologies. So what is your take on this phenomena being spread into other businesses, apart from what we're talking about here today? Per?
Sorry, I didn't get the question. Spread into other companies?
Other markets and regions, this phenomena.
I think you're probably better to
answer
that.
Yeah, but then I think we need to, the other markets need to get up with more people that can help the companies. Because, I mean, these young companies coming in maybe from, like you said, from Karolinska Development, they come in small companies. There are a lot of researchers only and professors and very clever guys, and then you need, but maybe they're not very used to do IPOs and bring in money, and they need the lawyer parts and everything. So I think they need to get step up the advisory side in many countries to be able to help these companies in the early phase, because it's you can be as super professional in something, but this is another thing that they're not used to, and also take care of the investors.
This must be something that you're familiar with from your perspective.
Yes, venture capital is definitely an important part in the chain, so to say. Was your question more related to the MTFs here that spreading out to the other
exactly.
markets? Okay. So I'm not really on top of all the MTFs around in Europe, but I mean the relation has been there in place since 2005, I think, or something. And it's not only having the possibility to do it, you have to have the other things around it, which we have here. But I think maybe I think there's one working quite well in Germany, and we actually copied AIM, which was 15 years earlier. So there are other markets already doing it. If it will spread, I think they would like to, but it's not easy.
It's also a little bit about putting the right rules and regulations for these markets as well. And it's a sort of a balance between easy access and also being a little bit tough on the companies, so we don't see any scandals and stuff like that as well. And that's a little bit of a challenge to keep it on the right level. And that's, I mean, just go out in Europe and see there are not many of these that are attracting so many companies that we do in little Sweden with 10 million inhabitants.
It's quite unique. We should be proud of this, and I guess we are.
Yeah, we are.
Yes,
definitely.
you look proud.
And as you said before, we are you said we're such a small country as well, so everybody know each other in some way. I mean, if somebody client call me and they ask for something, and then I always, somebody that can help them.
And that's not the case in major markets. I mean, bigger markets
I
are
don't think
the same way, no. So David, would you like to add anything here?
No, I think most is said. It is sort of a stars-aligned concept. We have everything going on for us here right now. I think the demand is out there in a lot of other markets, but they lack some sort of components to get this to the same stage as we are. It's not impossible that they will get there. I think a lot of them are striving to, but what we have here is it's really good.
Let's dwell on the financing situation a bit. In Sweden and also in the other Nordic countries, we've had a good history of growth companies being able to finance themselves with equity in connection with growth market listings. Do you agree on this? This is the case we can talk about? Yes, great. So do you see this as one of the important reasons of why, unproportionately, many tech companies have succeeded here in Sweden, well, and also in the Nordics? David?
I think so, yes. I mean, we started out this discussion on the development in the 80s and 90s, and those successful companies that are now unicorns have made exits, some through IPOs, some other ways of doing exits, but that kind of capital is reinvested into new companies that can grow. And that kind of trickle effect, I think, is helping a lot. So without that structure and the environment we have around listings, I don't think we would be the entrepreneurial country that we are today.
Thank you, David. Per?
No, it's opened up for a lot of private investors who would like to see a liquidity in their holding. And if then you can take the risk because you know you can actually get liquidity not too far away. So it really has helped smooth the whole system a lot. And it's unheard of, I think, to have that access to so much capital in such early phases. We should also remember there's a big risk with this because there are lots of companies out there, and I'm also responsible for some of that, who will need more capital, and if there's a downturn in the market, it might be quite tricky to be listed, actually.
Okay.
No, but it's true, and we also have to thank, we have Almi and we have Innova and these guys as well, helping the companies early stage and angels, and then we have this market, and I mean, especially in your sector with life science companies, I mean, these companies need money. That's the way it is, and we have many companies in this sector, and they can come in and ask for more. And so I think also it's like you said, it's important to keep a good liquidity in the shares, so investors can get in and out in an easy way. So that's sort of a takeaway for the companies that are going in, that make sure that you spread enough shares so we can have a good liquidity in the shares, and then you will have an easier time on the market.
So David, you've been presenting here today, but let's ask now Per and Håkan about what are your main takeaways from the first half of this day listening to the presenters?
I'm sorry, I was not here. I was actually in another meeting.
I thought I saw you earlier on. Yes. All right, so let's turn to Håkan.
I was here and listened to the last three ones, and I know these guys since before. I've listed them all three on our market, so good choice of companies.
Good choice of companies.
Yeah.
Good choice of companies.
And I must admit that with 135 listings this year so far, and a pandemic, so I haven't met many of them in a long while, so it was very nice to meet all these people in real life again. So thank you for arranging this.
See a lot of happy faces here. It's nice to be able to meet in person.
It is fantastic. So and also that, I mean, takes a lot of time to bring in the companies that we have, so it's a little bit backlog on the retention, so to say. So I'll try to do my best.
Absolutely. I have one question here that's actually, I didn't prepare, but it just popped up because when you spoke about that it's easy to meet people and that you can call each other and you know each other. When we look at the statistics for Sweden, only 1% of venture capital goes to companies that are founded by women. And of course, we know that we like to hang out and talk to people that are more like ourselves. That's just the way we're run as biological creatures. So how do we get about this so we don't lose companies that might be, should be able to develop? in this well, if you look at gender, because that is a topic we need to talk about. So how do we navigate in this so we don't sort of...
If I just, since I'm in venture capital, I mean, we don't discriminate in any way, or I mean...
I don't think it's discrimination, it's more of making sure that we have that ear open.
In life science, there are actually quite a few female founders and researchers, so I think it's fairly 50-50, I would say, in that sector.
That's true, it's
so
different
that goes
technology.
more along where maybe there is a more equal balance, gender balance, in that industry in general. In IT, you have another balance, for instance, and I think that's reflected. If venture capital invests less in women-founded companies, I can't see that.
It's actually
really.
only 1% that goes to companies that are founded by women.
I don't think it's the fault of actually discarding that or any. I just don't understand those figures actually, because people don't really care if it's a woman or a man. It's what the company is and what the opportunity is, I would say. But that's my view.
It's just the numbers, the statistics are staggering. So it's just
scary.
It's important to bring it up.
Yeah,
David.
and this is a big problem, and I mean, we should definitely try to infuse more female entrepreneurs from scratch and in the funding rounds as well. From First Venture's point of view, we're working actively with this, trying to find both ways of identifying female-driven companies through female networks for entrepreneurs or for investors. But I think a big part of this is giving the courage to women and the education as well, because now we're talking, at least some people are talking to men in one way and women in another when they're at a young age. I think this is moving away, and I think we're getting a lot better, but I think it's important to encourage young women to take these steps and becoming entrepreneurs as well, because the big unicorns we're seeing now are mainly driven by men, and we need to boost the female role models that we have, because there are a lot of them. Even though it's only the 1% of equity being held by women, I think we should really try to raise awareness of this and try to make them the role models they deserve to be.
Thank you, David. But it's because otherwise we might lose talent and we might lose ways of making money and changing the world, right?
Yeah, sure.
Would you like to add anything?
No, we were very happy when we had Revolution Rates listed a little while ago. She was the first
I know she was the
female
first
founder that got all the way.
Yep.
And that's fantastic. And actually we have, in the US, we have introduced something that the companies that are getting listed there need to, we have put gender equality, or also not all these more equalities that they have in the US. It's more than gender into the companies that they have to, like in the code of corporate governance to the companies there. We are pushing the companies when they come to us to look over their structure and how it looks, and asking them the questions how they can do to improve their equality in their boards and management teams. So we're trying, but it takes a while, I guess.
Well, thank you for answering that question.
Yeah, no,
and thanks for hanging out here for a while and with this panel talk. And now we need to get some food, right? Yeah. It's time for lunch.
Thank you.
Thank you very much.
Thank you.
And we'll see each other back in 2021. I hope you had a nice lunch break. We did indeed here at Grand Hotel at Spegelsalen. We will now meet a representative from Insplorion, and Insplorion has 4 branches of operation: battery, air quality, and hydrogen sensors, as well as NPS-based research equipment. And it's my pleasure now to introduce Patrik Dahlqvist, who is the CEO of Insplorion.
Thank you very much. Thanks for having me. Yes, so I'm here to present Insplorion, where we work with a sensor technology that is used for helping out in for a faster transition for fossil-free energy, monitoring clean air, as well as developing instruments for research. In short, we are a Gothenburg-based company. We are sprung out of the research at Chalmers University, where our founders back at the end of the 90s started to work with the nanoplasmonic sensing technology. And that is our base, and that is what the company is founded on. And it's a technology that is verified, it is patented, and it enables to make sensors that are small yet robust, as well as making them scalable and easy for production. We're working in 3 business areas with 4 products. Research instruments that we've been doing since the start, and had with the first sales already 1 year after that we started the company. Gas sensors, we've been working with the air quality nitrogen dioxide sensor for about 4 or 5 years, and fairly recently also started with our hydrogen sensor, but that is a project where we've focused a lot lately and been able to move quite fast. And then the battery sensor project, that's probably where we have the biggest potential in market, but it's still more in the development phase. But we are making some good progress with getting the technology into German automotive manufacturing industry, for instance. But sensors, why invest and think about sensors on the grander scale? And it's a good time to be a sensor company. The reason is that there are quite a few global trends that are supporting the need for sensors. We have an increased automation in basically any industry, and to be able to automate, you need to sense, otherwise you can't steer. It's also an increase in safety demands, especially in these newer technologies. Batteries, they are getting more energy dense, and that also makes them more explosive. And also hydrogen, of course, which is an upcoming explosive gas that still is very useful when it comes to helping out in making a quicker transition to fossil-free energy. And how do we fit in, and why do we act in these areas? And that is basically because when we come in with a new sensor technology, old existing areas, they usually have been able to optimize and solve their main problems. But where there are unsolved problems when it comes to optimization and when it comes to safety, that is where there are growing technology development. And that is within hydrogen, battery, as well as gases for monitoring. It is areas where we are working where there is a fairly big markets already. They are even more expected to grow. The biggest of the one that we're in is the lithium-ion battery market, which is getting close to $100 million by 2025. But hydrogen is picking up fast. It's seen as second, but it's picking up quite fast with an expected market value for fuel cells close to a little bit about $40 million. Environmental monitoring is the smallest market of where we're active, but it's still decent figures. It might look fairly spread out and broad when looking at Insplorion from the outside, working with hydrogen sensors, battery sensors, and air quality sensors. And then on top of that, been selling it as a research instrument for 10 years. But from the inside, it actually looks the same. they are all based on the same technology. So from the inside, it's the same, just using it in a few different ways. And what is this from the inside? It is basically that our researchers back in the end of the 90s, they started to see that working with nanoparticles could enhance a sensor signal in a very efficient way. After 2 PhD theses back in 2010, the first patent was filed, and it is by using nanoparticles in a smart way so that the rest of the electronics can be simplified. In a sense, our nanoparticles are enhancing a signal, a chemical signal most of the time. And in that way, we can use cost-effective light source as well as detector and still have reliable and good data coming out. So thanks to using these nanoparticles that simply are measuring a color change when any chemical substance gets close to them, that is how we have this platform. And then the way that we coat our nanoparticles, that's how we make it selective to different things. So for our hydrogen sensor, we're working also with mixing it with platinum, and in that way we can target it to hydrogen. When it comes to the battery application, it's a coating of graphene or being close to graphene, and then it's lithium ion that we're mainly measuring. During the time, we also expanded our patent family from the first mother patent to a little bit more applied type of patents, one for using the technology as gas and one for using it as a battery sensor. One slide about our research instruments. It's where we started. The real good strength is that it helps to verify the technology. We now have products that are used for research within material science, usually looking at gases at different temperatures, catalytical applications, but that's also where a lot of the work has been done for instance, our hydrogen sensor. We have now 2 different products for life science applications, and then we recently started to package our portfolio so that it fits a lot better to battery research. I'm getting back to that. But the strength is really that it helps to verify our technology. It's now more than 100 scientific publications out telling everybody how the technology works. So we don't get these questions that we have had in the beginning. Does it really work? Yeah, you just pick up any scientific publication in your area. It also helps us to ensure that we find the right applications where the technology fits. So a lot of the work on the research side has helped us to find how we fit in gas applications as well as in battery applications. One slide about our air quality sensor. It is now in early market and sales phase, where we are conducting customer projects and integration projects. We have an ongoing collaboration with a company called Leading Light. I think that is a good example of where we are, where we basically have our sensor and where we're working together with them because they already have a connected system. So basically they are up and running and have solved the infrastructure when it comes to transporting the signal, and then we simply add our sensor so that we for cities and the communities can make a much more complete offer, not only smart lighting, but also monitoring the air quality at the same time. But lately, where we have had most traction and most interest, it's it's moving out from the Nordic countries. That's where we started because that's where we had the closest collaborations. But we get much more traction in the UK, so where we, for instance, have this collaboration with Urban Flows Observatory. And the reason is because they simply have crappier air there. They have bigger problems with nitrogen dioxide. it's also there where we start to see where we have most of our integration projects that we hopefully can talk a little bit more on down the road. And it's not only, that's worth to mention, it's not only about monitoring. We have shifted more into also ventilation control of premium ventilation systems. Hydrogen. That is fun because that is where we have been putting most of the efforts of the company during the last year. The reason for that is obvious. You can't almost go a day without having any new news about new investments in the hydrogen economy. Fairly recently, the Gothenburg Harbor announced their big projects. We have the Hybrid up in the north, where steel is going to be manufactured with hydrogen in a fossil-free environment. But when scaling up hydrogen, that's also when it becomes obvious that there are quite a lot of optimization that is needed, as well as there are continuous safety concerns. And that's really where we come in, to help out both on the research side, but long-term on ensuring that there are safe operations and that the system, the new hydrogen systems that are set up, becomes efficient in the way that we work with hydrogen. What is nice with our sensor when it comes to using it as a sensor is that there is publication out there showing how we have the world's fastest hydrogen sensor. When it comes to safety, speed, of course, is of essence. It doesn't really help to send off alarm after it has exploded. So that truly gives us a good, unique selling point. The reason why we've been able to work fairly quickly with our hydrogen, it's our youngest project. It is because it's based on the same platform as our NO2 sensor. So in essence, we can reuse quite a lot of what we have already invested in our NO2 sensor. And we are now running mainly the project together with Chalmers as well as PowerCells, so that we both bring in the top-notch knowledge and on the core technology, on the coatings and so forth, as well as ensuring that it gets customer-driven early on. So except for the product development that we have been focusing on lately, and where we have the objective to have a customer prototype, that's basically a prototype that can work in an explosive environment by the end of the year. We're of course also working with the business development so that we have something, someone to put in the hands, some hands to put the sensor in when getting it out. One thing that also have helped lately is that we could announce that we are selling research instruments for hydrogen development to IFER, and this we could announce 2-3 weeks ago. And that gives us a good reference site in the heart of Europe when it comes to hydrogen research, and it will help us in open up both academic but also industrial doors for our hydrogen technology. When it comes to batteries, it's also a new technology, maybe not as new as hydrogen. At least it has been a lot more investments going into batteries lately. But there are still a lot of optimizations that is needed. And that is, again, where we come in, to help out in optimizing the usage of batteries, and in that way increase cost efficiency as well as increase weight efficiency and safety. And we can do that simply because we have our core technology. Our nanoparticles can be put on a very thin optical fiber. Since it's an optical technique, that's also essential when going into something that is electric. You can't really put anything electric inside. But a very thin optical fiber can sit inside a battery without affecting its performance. And there it can also give the core information that is needed to optimize. Currently, in a sense, battery packs are optimized when you look at it from a distance. You're basically measuring voltage from the outside. while what is needed to optimize is to understand and see how lithium ions are going in and out of the electrode materials. So by giving that type of truly unique information to the battery steering system, we can increase the efficiency quite a lot and simply get out more and optimize both during operation as well as during how fast you can, for instance, charge your car. We are working with this both in European funded projects where we're running 2. The one that I think is most fun to talk about is the one that is called 3 Believe, where we have more than 20 actors involved, for instance, Volvo and Fiat, with the focus to developing the next generation vehicle battery, and where sensors are one of the important parts, of course. But it's what also happened recently is that we were able to get our technology into the research development department of one of the leading automotive industries in Germany, one of the big 3. And that is, of course, a huge advance for us. That is how technology usually is adopted. New technology, you start to get it into the industry. On the research side, then it moves further into testing and quality, and then it joins in the product. So long term, we can see how we again can use our research instrument and get acceptance for the technology, and in that way ensure that it goes into the product in the long run. So that, and what is really important about this is that we see how the information that our technology gives, it is now verified that it is needed by the industry. First in research, but the same information is also what is needed for optimizing the battery packs. One note about the team, we have been able to grow on the marketing side, so the 2 new faces that is on the edge here have joined during this year, and we are further balancing and heading more into this commercial organization that we have been focusing on lately. And a few notes about our share and our investment. I'm one of the companies that are not here to ask for more money. We have a pretty good run time ahead of us, as we were able to close a financing round less than a year ago, where we also got in some institutional and international investors. Especially AP Venture is a VC company that is focusing on hydrogen and the hydrogen economy, and that has, of course, has strengthened our position in that field. So, to summarize, we are working with the technology that has been developed at Chalmers for a long time before it became a company. We are verifying it by selling it as a research instrument, and we are working in 3 hot areas where we bring in unique opportunities. So with that, some good questions maybe.
We have time for one.
One.
And it's about the change of CEO to Johan Rask. It's going to happen quite soon, well, beginning next year. Tell us about this shift.
I've been with Insplorion now for almost 8 years or something like that. And it's a lot longer than I usually stay because it's such a good and fun company. But I've been approached a few times lately, and now I simply thought that it's a good timing. But before I made the decision, I was able to discuss it with the board and initiate a good succession. And I'm really happy that it's Johan that joined. I don't know him personally, but I know about him. And I think he's a very good fit for where the company is and where it's heading. He's strong when it comes to trade sales, and he's strong on analytics, and he's strong on the commercial side. So I'm really glad that he's taking it from here on. From 1st of February until
1st
then,
of February.
I'm going to run it.
All right.
Definitely.
Well, thank you very much, Patrick. And best of luck with your new endeavor.
It will be fun too.
Thank you.
Thank you.
The next company is Flexion Mobile, and with us we have CFO Niklas Korosar. And Flexion Mobile is an open and global distribution platform for Android games. So let's now hear more about this company.
Thanks a lot.
You're welcome.
Thanks for that. I'm just going to grab a little bit of water. And I'm using this one, I guess. Thanks a lot. CFO of Flexion Mobile, Niklas Korosar. First physical event in 2 years because we've been in lockdown in London, so big excitement being here. We also released our quarterly report this morning, and we did quite a big game release also, so a lot of happening in the company. So what are we? We're a distribution platform for mobile games. So we go to third-party game developers, secure the distribution rights, and then we distribute the games in alternative stores. We're based in UK, 66 people, but it's driven by, it's founded by 2 Swedes called Jens and Per Lauritson. We have a run rate about 29 million pounds, so about 350 million krona, so it starts to be quite substantial revenues. We're EBITDA neutral in the company, and we operate with a revenue share model. So for anything that is generated in a game, we share it between the store, the developer, and us. We work in the mobile gaming sector, so it's not gambling, it's gaming, what the kids are doing. Big difference. And on that market, we're not focusing on Apple. So we are focused on Android, which is 85% of all devices. That's where the growth is. And on that market, we don't do Google Play, we don't do China. So we focus on what you call the alternative market. And as a company, we're growing a lot. Since the IPO in 2018, I think we've done 10x on the revenue. So it's a decent growth. So where are we in the value chain? The developers have 2 distribution pipes to the market, generally. It's Google and Apple, everyone does the same, but they're not really covering the rest. So what we are offering is the 3rd distribution pipe to the market. So the developer can cover the whole market with 3 distribution pipes. And why are we needed? The game developers, they're all in 2 stores. There's 4 million apps in each store. It's really, really hard for them to be seen. So the discovery of games is a massive market problem. So what they have to do, they have to be the biggest budgets, and they have to buy their users through user acquisition and advertising. At the same time, they are struggling to distribute in other channels because each game is now a store itself. So they're highly complex. It's quite cumbersome for them to reach out. So there is a market problem here, which we have solved by building up a service offer, a full service offer, where we are kind of one-stop shop for developers. So we can go to developers, basically tell them, give us the file you built for Google Play. We take care about it. We convert it. We do all the service stacks needed, and we send you back money. So it's a very powerful offering to the developer market. And yes, we're a service company, but we are a technology-based service company. And we have a unique tech coming from our history where we can automatically convert that file that you download from a shop that the developers built. And we basically hack ourselves into that file on a machine-based basis, go into the binary code, take control of the file, and by doing that, we can then add the functionality needed for the various stores. We're the only people who can do it. So we have 2 patents in the US now, and we're patent pending in Europe. The stores we're working really, really closely with. So we have the biggest portfolio of games in the market. So we are the kind of biggest provider of games to Samsung, not to one store in Korea because they're massive in the Korean market, but we are there. Amazon, Huawei, and also new players like Xiaomi, which is, I think, the world's 6th biggest device manufacturer, is now coming out of China. And the reason why I have all of these stores, developers want new revenue streams, The stores want new revenue streams, but at the same time, all these stores are building the software ecosystems. And as an example, the last thing on earth Amazon wants is that their mobile players go to Google to buy, to download the games, because then they're stuck in Google. So it's driven by very big factors. Regulatory pressure is very big in our market. You read on a daily that Apple and Google have problems. They have it in US, Europe, Asia, Russia, India, Korea, etc. So there's a lot of pressure. There's a lot of market changes. It's highly presented about IDFA that Apple take control of the user base, and that forces developer out into the new market. And you have the need of tailored stored, Southeast Asia, India, etc. So there's a lot of drivers for a fragmented open market. Why is it only us who can do this? That's a question we get a lot. We are the only player out there, and it doesn't make sense. And the reason for it, that what we're doing is highly, highly complex, and we're also managing really high IP, high-value IP, intellectual property. And our history we started 10 years ago, but really simple tech, really simple games, and simple distribution, and slowly, slowly built it up. Because there is no way, you can't enter the market now, because you may have the tech, but if you don't have any other games, you're not going to get games. If you don't have games, you can't get distribution. If you don't have distribution, you can't build the tech. So it's very much a chicken and egg problem, and the beautiful thing with this is that when you have it, you create really strong barriers of entry on the market. So basically, what we're doing, this is a super important slide. So it's our position in the market. So we're first mover on the market, clearly. We create really high barriers of entry. We have the biggest portfolio of games in the market, and we have access to the games through the tech. So when there is a new trend coming on, we can work on a portfolio basis to justify the investment in these new trends and put them into this. So we're positioning ourselves in the market now for all these new trends, which is, of course, very, very interesting. If you look on the portfolio games, and now coming into the quarterly numbers, we now have 22 games, and I'm talking top 500 games in the world, so it's about 5%. Is that a lot? These 22 games makes $40 million per month in Google Play, totally. So it's about $500 million. Google is about 35%, so it's about $1 to $1.5 billion in revenue on those games alone. So it's massive, massive games. What we've done this quarter is we signed another 4 really strong games. And those games alone has $36 million value in Google Play. So we effectively doubled the revenue potential of the company in this quarter. So it's pretty cool. At the same time, we did a very big transaction with one of the existing players. 6 of our games are now renewed for another 2 years. So it's super, super strong quarter. Why is this important? And it's about the growth of Flexion. So if you look on our top games, top tier games, we had 6 quarters ago, 5 of those, and they were generating $130,000 per month to us in average per game. And what we've done over the last 6 quarters is to grow those by adding distribution to $600,000 per month on average for those games. And of course, if we add another 4, and they're even bigger than the ones we have, you can see that there's a lot of potential here. And also, when you talk to developers, little Flexion are now generating, to someone with a large game, $7 million in revenue potential on average on a big game. So they are really listening to us, and that's why we sign a lot of games at the moment. Revenue-wise, I think it's fair to say we've grown a lot. Compounded quarterly growth rates of 17% over 10 quarters. We had a very strong quarter last year, or not very strong, a strong quarter last year. So this quarter we're flat on revenue. It's this kind of quarter in between, no new game releases, no massive events, and also the period before this super busy November, Black Friday, Thanksgiving period and into the December period. But still stable. We are on 42% growth year to date. So we are within we set a target of 40 to 60%, and we are kind of keeping track with that. Our gross profit, we grew by 10% over the quarter. So we have £1 million, so about 12 million krona per quarter in gross profit. And the cost base was flat. And this is pretty cool as me as a CFO, that if you look on the numbers over the 10 periods, we have done 4x on gross profit, and we've done 20% growth in costs. So you start to see how this is scalable as a model. And that, of course, have an impact on the EBITDA, and we're now at the point, I think it's fair to say, we're stabilized on neutral to positive EBITDA. Now it's to grow beyond that. So that is pretty cool. And then last slide, just a summary of where we are. So we have an existing strategy here, which is super, super simple. And it basically is, as I said, we are, grow distribution on existing games. Take them from $130,000 per month on average to $600,000 and just continue to grow the games. It's to add more games. We had 4 really big games this quarter, and add more distribution. The last one was when we really got Huawei going as a store, and we have others coming. So very simple, narrow core strategy, which creates a lot of revenue growth. You start to build diversification on your portfolio, and of course, if you go from 5 to 9 really big games, you you double that factor. And what is very important is we kind of reach a critical mass now where your marginal costs start to be pretty decent. For example, again, growing from 130 to 600,000 on average, the marginal cost of that is really, really low because it's existing games in basically existing stores. So it's just to continue to sell to the stores so they promote the games and build up the user bases. So that's the core strategy, and that's what we're always going to do with the existing service offering. But on top of that, we can, because of the market position, we can now start to add, I can put this down, we can start to add new service stacks to the portfolio. And I touched upon it, there is a lot of trends going on in the market. So we are now looking into that. We have 15 million cash, about 200 million krona in bank. We have a big mandate to raise capital if we need. And so we're looking at the moment at influencer market, for example, is a good example. That's something that is coming outside the big stores. It's small companies, 10 to 30 people, EBITDA positive, who needs a bigger home somewhere or a bigger capital source. So we're talking to players like that. We're talking in hybrid stores, which is direct to consumer distribution. You have hybrid distribution where you, for example, upload your game directly, automatically to the phone without the store. User acquisition, there are massive budgets on that in Google and Apple. The developers just want to spend the money if you find the right project for them. So all of that is coming to our market. So we're looking at doing this in-house through partnership and through M&A, clearly. And we have an M&A team, and we said here in quarter, we're now scouting the whole market and mapping it out and see where and what we do going forward. And that, of course, on top of the existing strategy, kind of creates some kind of crazy turbo effect. So you can really go for growth. At the same time, as in the green strategies, it's very much high revenue, low margin. I think it's about 12% at the moment, whereas this one is high margin business, which means that we can, if we manage to succeed with this, we can start to really work on the EBITDA level in the company at the same time as we can drive our own revenues in the green sector by adding on these services. So there's a lot of synergies that can be achieved here. And that is it for me, I think. So that's a short on Flexion.
Thank you very much, Niklas. You mentioned regulations,
Yes.
and there has been regulations coming out, for instance, from Beijing when it comes to the gaming market. How does this affect you?
Yeah, so that's there's a lot of these factors. So what the Chinese government are saying that they're going into the market and protect the young people from gaming. And yes, it's very kind of them, but I think they're taking control of the market, basically. The same thing as Apple are doing with this IDFA. They go in and say they want to protect the end users from data and marketing, but they take control of the ecosystem. And what these factors are doing is really limiting the developers' ability to grow and control their own revenue growth going forward. And so they are, it's the same thing. Developers on Apple are seeking new means of distribution, and the Chinese developers are now coming out in the market. And I think it's fair to say we've been very successful in signing up these Chinese developers coming out. Because they're coming out, they need to do Google and Apple, and then from then, but they are also very used to third-party distribution. So we are a perfect partner for them, and that's why we signed a lot of Chinese developers.
So Niklas, could you shed some light on what you think is the forecast for the Android market as opposed to the Apple market?
Yeah, that's a billion-dollar question. Apple is Apple, and I think what they're doing at the moment with this IDFA, and that means basically that they, in the past, you could opt out of sharing your data with the advertising industry and the developer. And now what Apple said, you have to opt in. So you have to go in each app and approve that they can take your data, which no one is doing. So they kind of cut the data distribution, which means that the developers can't optimize the distribution. And why are Apple doing this? Yes, they say they're protecting the users from data, but either they want to start making the money themselves. Why should the revenue stream go to Facebook? Or they're creating an ecosystem without a lot of advertising, kind of a super high premium product. And the reason why I'm saying that is that Apple will always be there, and they will make a hell of a lot of money for saying that word on their existing user base. But they're not really going to grow that much because the Android market, I have a Samsung phone, it costs as much as the Apple phone, and the hardware is as good. And it's more and more people, so the high end of the Android market is eating into the new users on Apple. But Apple always going to be the biggest party and make a lot of money. But Android is coming, and then you look at the new world, developing countries, which is more or less dominated by Android. So a lot of the new initiatives are on Android. It's 85% of all mobiles, so it's massive.
Surprising, I didn't think it was that type of dynamics.
It's Finland, Sweden, and US, which is Apple.
Actually, I'm an Android girl, so.
Good.
Well, thank you very much, Niklas.
Thanks a lot.
Thank you.
Thanks.
The next speaker is familiar to us, Per Jansson, and he is a board member of AAC Clyde Space. And you provide market-leading new space solutions and services for governments and also for commercial and educational organizations. You have the floor.
Thank you, Katarina. Thank you for inviting me. So my name is Per Jansson. I'm a board member of AAC Clyde Space. I'm here today and I wanted to tell you two things, basically. One is, how can satellites change your everyday life to the better? Maybe not obvious for everyone, but I'll try to explain why satellites might be actually important for all of us. The other thing I want to talk to you about is why AAC Clyde Space is an interesting investment case. To begin, I'd like to show you a very short film, which kind of addresses at least the first question.
From down here, space is awesome. But from up there, looking back down here, brings a new perspective, where data captured and delivered by satellites helps feed us, transport us, connect us wherever we might be, helps us preserve our seas and oceans, our forests, our home. It inspires us, protects us, finds us, pushes us further than we could ever have imagined. From up here, we see more than the vastness of space. We see a better life on Earth.
So, what is this satellite business really? I don't know if all of you know that we're actually changing the whole infrastructure around Earth from large, really expensive satellites to small satellites on lower orbits. And that's where AAC started, actually as one of the pioneers. Let's see if this works. No, I don't know, I'm trying to tap the next one here. Thank you. So in this big shift in space, it's still quite early for small satellites, but it's now taking bigger proportions. This year we're launching about 1,400 satellites so far. Last year was the first time over 1,000 satellites going up. So the numbers are growing. And just to give you an example of where people think this market, the size of this market in 20 years from now. So Morgan Stanley has come up with $1 trillion. That sounds like a big number. There are others thinking it might be even bigger or smaller, but just to understand what is really $1 trillion. I myself couldn't really grasp it, so I looked up and compared a bit. It's actually the same number approximately as Mexico's GDP with 140 million people. So it's a big number. The growth a bit more short term, if you look at the coming 5 years, it's expected to grow about a bit more than 20% compounded annual growth rate. So is that big or not? Well, it's actually bigger growth than the IT sector in itself. And if you look at the small sat part, where AAC is focused, it's growing even faster than that. So there is a tremendous growth going on. I'm not sure everyone is aware of that. So what is driving this? Well, it's actually, there are quite a lot of trends for why we need more data from space. It's driven by remote sensing, communication, navigation, self-driving cars, also quite a lot from the climate change that's happening, where we actually need the data to be able to handle that problem better. So coming back to what you saw in the film here, some examples of what do we actually use this data for. If I start from the top left there, well, wildfires, you might recall the big fires here in Sweden 2.5 years ago, where we had some satellite data actually helping them to fight that fire. It came from some African satellites, and they got the data every second day, which is not really helpful. It's quite easy to send up a small constellation of a few satellites to actually give that data every hour or half hour, with much better precision. And you can actually predict fires, and you can also spot them if they happen remotely in forests in Siberia or Canada. That's just one example. Another big area is actually to measure air pollution, air quality. For instance, in our big cities, maybe not so much in our part of the world, but if you go to the large cities in Asia and elsewhere, it's a major problem. And you need to measure that and keep control of it to notify people, and you can actually get it in your apps and so on. It's also important to understand weathers more and more with the climate change. That's becoming a big problem. It helps aviation, the marine industry. It also helps insurance companies to foresee things. And all the islands out there, they need to have alerts if something's coming on. And for farming, it's interesting. This is actually, the weather part is one of the key areas where we see a lot of growth for AAC, and I'll come back to that. Another sector is shipping, or the marine industry. There are new technologies coming out. AAC is developing one, which is called VDES, which is replacing AIS, sorry for the abbreviations, but it's a navigation system where you can actually, instead of having a one-way beacon from ships to know where they are, you can actually communicate two ways and broadband. So you can suddenly have a lot more frequent data on understanding if you're about to collide a long way from here. You can make micro changes to your course. You can slow your speed to save fuel. You can time exactly when you come to port. So there are very clear commercial advantages having the exact data real time all the time. It's also a safety thing. So this whole new infrastructure for navigation is now being designed and hopefully being launched together with Saab and Orbcom, and AAC is providing the technology. Another area is monitoring water quality and pollution. This is also driven a bit by climate change. We've supplied 2 satellites in a project called Seahawk, together with NASA and some universities in the US and a group of industries. They used to have a big satellite up there for almost 20 years. And this satellite we replaced with 2 small satellites on lower orbits. And they actually give better data, much more quality because they're on lower orbits. They can have better resolutions, and also the technology has advanced quite a lot since the big one was up there. The difference between these satellites, just to give you a picture of why we're changing to the small ones, the big one weighed about 600 kilos. The small ones weigh about 5 kilos. The cost is about 1/100th, and you actually get better technology, better data out of it. So it's a small suitcase like this, basically, that you send up, and you get really exactly what you need from this. And so the big satellite industry is having a tough time now. Another area which is precision farming. This is also goes a bit linked to climate change. We have less and less fertile soil around the globe, and we are about 7 billion today. We're supposed to grow to probably around 11 billion. That's what we forecast. To be able to feed, this is one of the major problems we have ahead, especially with the warming of the earth. So we need to be extremely efficient with the farming. And with satellite data, you can actually predict and know exactly when to water, when to fertilize, how much of water, how much fertilizing, you know when to harvest, when it's optimal, because with hyperspectral data you can actually see exactly on the crops when and how you should treat that. So it's becoming a very important part of precision farming. There are more areas, let's not dig into all of it. You saw some on the films as well, but hopefully I've answered some of the questions around why satellites might actually have an impact in a positive way on your everyday lives. So we're in a growth sector. This is just to illustrate the number of launches on the left side and the value of that going ahead. And AAC Clyde Space is really experiencing this growth. We have had 40 to 50% growth every year. There are new technologies happening all the time, new sensors coming in. We are acquiring new technology. New business models. We are launching, which I'll come back to, something we call space data as a service. So we actually own the satellites and we sell the data instead and get a recurring revenue on that. So that's a totally new game-changing thing for our business. There's a consolidation going on. We've been part of that. Just last year we bought 3 companies. I'll come back to that as well. We also formed a new group in South Africa, which is not an acquisition, but it's basically acquiring a group of very competent people there. So we're definitely living in this growth. So it's really a changing environment. So just to explain a bit more, what is actually AAC Clyde Space doing? Well, historically we come from delivering very high-tech components and subsystems, and actually eventually a couple of years, 5 years ago, something we actually developed whole satellites. And then we actually got more capabilities, so we then deliver whole missions. That means that we actually design, test, build, launch and operate the satellites. So we have, also with base stations, so we do the whole value chain, so to say, to handle the whole satellite mission. And we're now moving into what we call space data as a service, which is basically simplifying it for our customers. I mean, they've had to own and build even their own satellites to get the data they needed before. Now with the changes in this industry, they can just buy the data from us or from someone else who have satellites. And this opens up the possibilities for us to put more sensors into one satellite and actually deliver data to different customers from the same satellite. So it really drives costs down a lot. We standardize things. I'll come back to that as well, but it's all about modularizing, standardizing to drive the manufacturing costs down and being able to plug and play with different sensors into these satellites. In that way, we can radically get the cost down for satellites and deliver more data. And the really interesting part is that the margins are completely different when you sell the data. And you also have recurring revenues. We have 2 customers today. We have other discussions, of course, but just as examples, we have with Orcom, we're delivering navigation data for them from our satellites, and also with Wyvern, we have a project where we will deliver Earth observation data for precision farming. So this is what we're doing. And the group today, we started off in Sweden, in Uppsala. This was sprung out of Ångström University. So AAC is actually Ångström Aerospace Corporation from the beginning. It was a very high-tech, research-oriented group, really clever guys. And then we've commercialized that company more and more. We acquired Clyde Space some years back. Clyde Space is based in Glasgow, where some of you might have seen Katrina. There we have our manufacturing facilities and clean rooms. We then recently acquired these 3 companies here last year. It's Hyperion, a very high-tech developing company in Netherlands. We have Space Quest, our first acquisition in the US to get a bridge into the US market, which is where the biggest market is and really important for us. We have quite a few clients already, and this will hopefully help us even to grow faster there. They also own some satellites themselves. Then we have Omnisys, which is a Gothenburg company specializing in sensors for microwave sounders for the weather sensors that I was talking about before. So this is probably the most leading edge technology for weather data sensing. So that gives us a unique edge in that sector. And then the most recent one is South Africa. They are a group of software-defined radio specialists, which is also, you go from hardware to software more and more like in the iPhone, so you change hardware for software, and they are specializing in doing that in the communication area. Africa is, by the way, a very interesting market for satellites. Most of the countries want their own satellites, and they're also launching it, and we've sold quite a few already to small countries in Africa. And by the way, Sweden does not have a satellite, even. So that's an interesting fact. Okay, so just going to the financials. This is just to show you that there is growth going on. Margins are, I mean, we're focused on growth, so we haven't really focused on having a profitable company that much, even if we try. But we do invest a lot in the growth, and it's happening. We have an order book backlog of a bit over 400 million. We're targeting sales for this year, which is official, about 200 million. So we're growing about 50% this year as well, hopefully, if we manage to reach that. These are the half-year figures. I don't think we need to stop really going into that too much. There's actually an analyst report coming out today from Pareto, which was quite good. And next week there will be the Q3 report coming the 25th. So these figures are from Q2, so maybe more interesting to see in next week's figures. So this is a target we've set to grow in 2024, have 500 million in revenue, which actually I think is a bit conservative, but that's what we've communicated to the market. If you look at what that is composed of, it's doing what we're doing today, but the big growth new one is space data as a service, and also advanced sensors, having acquired Omnisys. So why invest? Well, we're aiming to become one of the world leaders in commercial small satellites. We're actually already on the map, so to say, and we have really high ambitions. There is a really exponentially growing market, and we are well positioned to actually grow with that, at least that pace. We offer the whole solution from end to end, and we will grow both organically and continue to acquire companies. Thank you.
Thank you very much, Per. Fascinating. I'm sure many like me are not so familiar with the world of satellites. So a question, where do you find your clients, and how do you address the new ones that you want to be in contact with?
Well, there's a lot of interest for what we're doing now, because since this is a very growing industry, and the need for data is so high due to these trends. Now we're kind of known in the industry. AAC has a very good reputation of high quality, and they're actually one of the pioneers for these small satellites. So we can live on that brand slightly. So we actually have customers coming to us quite a lot. But that hasn't always been the case. We were out on fairs, and I mean, like you do in a small new industry and all that. We were maybe 30 people in one of these fairs 10 years back. Now you have thousands of people there. So there's been a big change. And now we're actually having clients who are large global customers, already incumbent big industry players, which was not the case a few years back. So we've moved from selling more to governmental bodies or science projects, like if you go back 8-10 years, and now it's actually almost all commercial and larger customers.
So Per, how many satellites do you have in orbit right now, and how many do you expect to have, let's say, in 5 years?
We have 13 satellites in orbit, which doesn't sound much. We have 27 satellites in design and production right now. In 5 years, I don't know, but if we just looking at the numbers now, and I mean, a guesstimate would be probably more than 100 satellites up in 5 years, but that's my personal just guess. I don't have any facts on that. Just to compare with how many satellites are launched this year, up to now, I think it's 1,400. So it's a small portion of a big market. Many of those satellites are in huge programs with satellites which are slightly bigger than the ones we do. So it's not really comparable always, those numbers. But we don't need that big portion of the market to actually have a very decent revenue.
But is there a limit to, I mean, to regulating, there must be regulations to how many satellites you can put up there before it gets too crowded?
They need to be out of orbit after 25 years, and you need to, you also need permission for their radio frequency. And you need a permission from the country where you send it up. But it's actually, it is regulated, but it's not that problematic. There is a bottleneck with the radio frequency mainly. One other area I didn't mention is the debris out there. And you might have heard about the Russian.
Oh, yes.
Yeah, and we actually have a project around that to detect debris and actually
clean it up.
Push them down so they clean it up.
Because there are collisions in space. We've heard of those.
Yes, it's a growing problem.
Well, thank you very much for your presentation. Fascinating. Thank you.
Thank you.
Well, let's take a break again for coffee or just moving about a bit. And let's meet back again at, we meet back again at 5:22. All right, let's get started again. The next company is represented by Eli Como, who is CEO of Kiliaro. And Kiliaro is a new generation photo gallery that handles photo sharing automatically. And here he is, automatically. Join us, please. Welcome.
Hello, everyone. I'm glad to be here. Thank you, Naventus, to having us here. I will present Kiliaro. So let's go. Try to see if this is working. So for a few years, we have been building a cloud architecture with the focus for integrity, quality, and privacy. And to describe Kiliaro as easy as possible, I would say that we take the best things from the social media platforms and from image gallery platforms and put it together and created Kiliaro to make sure that we could share photos still in a social way, but in a more privacy way, and have the integrity question as on top of the mind. So we are here to make sure that we could still be social, but be social in a more safe way due to the other social media platforms. So I will try to show a movie here. It will be a 3-minute movie, but it clearly describes what we are doing and where will we go. So please help me with the video. No voice.
Like a boring event, an unsuccessful day, or being stuck in a long-term rut. Are social media platforms really all that social anymore? Today, the largest online platforms have become marketplaces designed for self-promotion. Famous athletes, actors, artists, and even politicians use their profiles to show off. Influencers use power derived from the attention they get on social media to compel others to behave in a certain way or buy specific products. Their status updates and other irrelevant content tend to dominate our social feeds today. Today's young people pursue a large part of their social interactions online via various messaging apps, games, and social media. This is not a problem by itself, but rather a new reality we must adapt to. The real problem is that their experiences with these platforms rarely reflect real life, especially when much of what they are presented with consists of good-looking, strong, well-dressed, and rich people. When your concept of what life should be is only the shiny side of a coin, the perfectly normal, dull side starts to look unnatural. And unfortunately, keeping up with celebrities and following all the newest trends has shown to lead our youngsters to depression, performance anxiety, exhaustion, low self-esteem, sickness, disorders, and more. New clothes, new moves, new styles, new friends, new phrases. It's hard to keep up. It's hard to fit in. It's exhausting. Dante, 14. It's hard to be satisfied with yourself when everybody you see on social media is so perfect. It makes me think like, what's wrong with me? You know? Marie, 15. Then we also have the social media trolls and predators, bullying, harassing, and terrorizing people. Social media can be fun and fulfilling in many ways, but at the same time, harmful, mean, and scary in other. In the days before social media, we spent more time in real life and saw the good, the bad, and the indifferent parts of life through our experiences with friends and family. In a desperate attempt to protect and return to the way things were, many parents have chosen to restrict their children's access to the internet. Unfortunately, this strategy all too often backfires in the form of kids being excluded from online friend groups and feeling like they've fallen behind the curve in terms of their digital know-how. While we may never truly be able to return to a world before social media, there is a way we can cut through all the noise of celebrities, influencers, and unrealistic representations of everyday life. Kiliaro is a new kind of social media that wants to get back to some of those good old ways, while still keeping you connected to the digital world. Unlike the public social media platforms of today, Kiliaro is more of a private platform. It still gives you the opportunity to socialize with your real friends, your family, and colleagues through photos and videos. However, in Kiliaro's world, there are no concepts like followers, likes, or influencers. You just interact with people you have an actual connection to in real life. It's as simple as that. Kiliaro is on a long-term mission to give people access to the best platform possible where they can store and share meaningful experiences and memories with the people they care about in a way that's sustainable, practical, and promotes well-being. In other words, Kiliaro is a social medium that's more social, genuine, and real.
Yeah, I think we could, by this video, probably say that this is a life we are living right now. We could feel this, we could see it in a lot of way. The social media have been affecting us in a negative way the last year. They have lost the purpose of what should be to be, but now it's more affecting us in a negative way. It's driving mental illness, bullying, all other bad things, and it is due to the unrealistic life we are living. So a lot of people it's feeling that, and especially young people. I could read in the newspaper 2 weeks ago, a girl called some name. She was 19 years. She was trying to do different surgeries by herself to match the ideal profile that she was want to look like. So this is things happening in our world, and Kiliaro want to change this by still connecting you social, but with your real friends and your family through videos and photos. So our mission is to give everyone the smoothest way of sharing and storing memories with full respect for quality, integrity, and security. And our history starts back in 2014. 4 founders with a tech background started this company and built it up advanced cloud architecture, which means that we don't use a third party to save the photos and videos that we have, and we can also have this competitive price with €2 per month flat fee. We have built a backend API, which means that in the future we will be able to connect other features to Kiliaro that make the Kiliaro more fun and more easy and more interesting by using editing, printing, and stuff like that in Kiliaro. We have built front-end solutions, so we are both represented for App Store and Google Play, but you're also able to collect by Kiliaro by the web. So you are all the time you have all the time the access to your photos and videos without independent on which platform you are using. This is a problem at itself, you know that, because sometimes you are in travel and 5 of the guys or the girls have iPhones and 1 of them have Android. It's difficult to share the photos then. So you need to more or less use WhatsApp to share the photos. So this is the only solution, more or less. We have built a social platform in the gallery, so means that you can still connect with your friends, with your actual friends, and you can comment and socialize directly from Kiliaro. So you don't need to go out to the other messaging apps or the social media to still be connecting with your friends. We listed at Nasdaq First North at September, so we only 2 months ago. And our business that we have been trying before this year have been showing us a high conversion and a very low churn. So people that is using Kiliaro don't leave Kiliaro. We have very low churn there. So it's showing us that we are doing the right things and the timing is right. Our position is unique. We don't have any players there yet, but we have been identified. So in this diagram, you can see that we have photos, photo and video, and general content in the y-axis, and the public and private and the x-axis. And you can see that Instagram and TikTok is photo and video-based platforms, but those type of media have become more or less a marketplace where these influencers type have been growing. You could see a lot of advertising, you lose your integrity, and it's maybe in somehow you could be private, but still, people you have been connecting 5 years ago, it's still not, you don't remember who was your friends in Instagram. So the photos you're putting in Instagram or TikTok or more or less, you need to be perfect. It's always shining and always happy, smiles, no bad things is sharing there. So it's more a marketplace things in those type of platform. Facebook, all you know what it is. It's general content, and it start losing users over time. In the last box, we could see Snapchat, WhatsApp. It's more general apps that you use for conversations, and those type of apps are also being using for sharing files and medias. But what we can exactly know that using those type of apps, you lose the quality of the photos and videos you are sharing there, but also it's difficult to organize, because all the time you start new groups and people is adding photos over there, and you just lose your controlling of the sharing photos by the conversation. So it's not a good way at all to do it. But with Kiliaro, you can easily do it with our unique function and world first features, live sharing. So you just collect your friends, exactly what you do in WhatsApp. And then you go to the live sharing button, push it on, go to your camera and start shooting. All those photos you had shoot at the live session will be directly transported to the friends that you want to share the photos with. And from that, you can start comment and socialize directly from your photos. And this is very unique for us, and this is very unique for how we want to organize and store the memories of the lives. So you just want to go to one place to still have your memories in one place, but still be connecting to the digital world and your friends in a smart way. So we have two different things that we offer. Our social features that offers the live sharing that I just recently spoke about. It's a unique features that we have developed by ourselves, and it's world's first, and it's directly sharing your photos to your friends by using this function. You don't need it to do it manually as you do regular today, because today you photo everything and then you go to WhatsApp, start the groups, and then you start selecting the photos you have been photoing and shooting it to your friends. Now you don't need to do it. You just select your friends, go to your camera, start shooting, and all the photos is collecting to your friends directly. All of those presented in an organized feed where you can start comment and socialize with your friends. So it's like an Instagram, but it's for only your friends. And then on top of it, we will offer also a collaborative album, which means that we will put albums for your friends, and you will share the album with your friends, and all of their friends can collect photos and videos to this album. So it will be a more live album. So you can all the time be updating the kids' pictures in this album with your family or the friends from the fishing friends or the event from Naventus, for example. And on top of it, we offer our customers, our users, a cloud storage service, which is competitive cloud storage. It's saving all your pictures and photos with high quality. We don't reduce the quality of the photos, which means that, which maybe is not known, but the other people, the other actors is basically doing it. They reduce your quality of your photos. We don't do it. We offer you 100% integrity. We don't sell your photos to third party. and you will not be advertising with something from us. And our service is, for today, located in Sweden, so your photos and videos, it's saved in here in Sweden, basically in Södermalm. We offer you unlimited space. You don't need to worry about that your mobile will be run off space. You will always have space. You can just go photo, 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 and you will know that you always will have space. We don't have this scalable upgrade business model that the other cloud businesses have. And for that, you need only to pay €2 per month. You will not find it anywhere else. The market, why this is a market and what will happen. Basically, the world's largest hobby for the moment is photographing. And this is due to the smartphones. All the smartphones, it's all the time, they do the delivery, better camera, better functionality by the camera. This is what we see all the hardware it's delivering. And for 10 years ago, if you was traveling on holiday, you would probably see some Canon photography cameras like this big. People was running with them and taking photography. Right now, they only use their smartphones, and they take pictures all the time. So this is really, really right timing for it. Today, it's over 2 billion users worldwide using cloud storage, and this will increase. This is how will we save our pictures, and this is not a market that will stand for only 2 billion users. I think it will be grow, especially when the young people is coming, because they are adapting to these services much faster. And in 2021, the market size for these services is 27 billion, and in nearby 6 or 7 years here, it will be 6 times higher. We will grow to $160 billion. So this is a market, a huge market, and we are acting in this market, which is give us a good opportunity to have good revenues and take share from this type of market. This picture is maybe not saying that much. It's no picture on it, but I will say that great things here. It's 4 of the founders that are have been founding this company. Is all of them is operating here, which is very great, and they have all our technology is in-house with them. So the technology is in-house, and we are very comfortable about it. Just quickly showing how the user journey works. If you use Kiliaro and you start shooting your pictures that you want to share with your friends, if the friends that you have been sharing to don't have Kiliaro, they will receive a message with a link. When they push the link, they will get thumbs of small icons when showing the pictures, so you can recognize yourself. So you don't think this is a virus or something, other things coming to you. You will directly be sending to App Store or Google Play, and then you can download the Kiliaro, and you will be presenting the feed with the photos you have been shared to. And you can see the number 7 of there, it's the number of comments on these pictures. So we, in Kiliaro, the photos will all the time be the priority, and the comments will be secondary. You push up the photos, you will see the comments and start socializing with your friends. And this is a quick view over how the live sharing is working. You select your friend, exactly what you do in the WhatsApp, or you want to start a group. You push the live sharing button and go to your camera, start shooting, and all the photos you're shooting will be directly sent to the people you have been shared to, and will be nicely presented and organized in the feed, in the Kiliaro, and you can directly start comment and socialize. I was doing that when David was here and presenting for First Venture, and send it to Peter and Arjan directly. So it works. Just a quick picture of our roadmap. In 2021, we have built these comment features that you could socialize by Kiliaro now. So all the pictures you are sending to you in the feed, you can comment and socialize directly with your friends. We have, for 1 month ago, we released our live sharing function, which is live for both the Android and iOS. And we have also set up for the localizations tools. That means that we can easily go into another market by translating all the things in the app, everything due to this market we are entering. In the coming years, we will definitely upgrade our doing additional features to make the social features, the social platform Kiliaro more and more impressive. Collaborative album will be here, and then we will have event sharing. That is a very good, will be a feature that will make photo and videos in event very easily works. So we will enter event, and then we will get a QR code, and they will attend the event. All the pictures taken in this event will directly come to an album that all people in this event will be having access to it. So basically, standing for have one photograph over there taking the pictures, all of us can take pictures and can get access for the pictures with the event sharing. And then we will be able to add printing, editing, and organizing at the futures. So the sales and marketing strategy will be, we will be focusing on B2B partnership. He will be working with companies that are matches, homogeneous, competitive market, that the price and the offer are more or less is the same, and we could add competitive advantage, stickiness in the product to make sure that they don't, to make sure that the churn is decreasing, the loyalty is increasing, and we can add a revenue stream for them. I have the background from the telecom industry, and we was using such as things of collaboration with other companies. So we know that our product, it's giving them a stickiness and a competitive advantage by using us, because they can make sure that the KPIs, business KPIs will be better. And then marketing, B2C, influencer, social media, PR, and then at the basic organic growth. When people is using Kiliaro, photo sharing is a way what we do every time today. And when we're sharing pictures, people don't have the Kiliaro, will download Kiliaro to see the picture. So it's a huge platform for us as soon as we have been touching a market with numbers of users. And that will take us to our vision to grow and have a lot of users in Kiliaro. In our market, it's the global. Of course, we will check different KPIs to make sure that we are entering right market, but the whole world is our market, and we could see that, because this is a behavior that we have identified, and the timing is right depends on integrity, privacy, and but still could be more social in a more fun way. Thank you.
Well, thank you very much, Yili. Very interesting. This. Are you looking at the clock?
Yeah, we're checking the clock. Yes. I was but nervous about.
So was I. So let's see. How many users do you have now?
What we have been, we are basically in a silent period now, but the previous numbers was 11,000.
Mm-hmm. And in 5 years, you will be how many?
More than millions users.
More than 1 million. And just one final question. Is it mostly young people and parents sort of steering their teenagers or their kids towards this app, or is it all generations? Who will be the primary users of Kiliaro?
What I can see, it's the integrity and privacy. It's quite important things. I think between 25 and 45 years old people will be the first primary group for us. And as I said, in the future, I think my kids, when they're growing up, because they're 5 and 3 years old today, I think they will be using Kiliaro instead of Instagram and Snapchat, because I will be controlling who they are sharing to. And also I can make sure that they can still be social in a more fun way without any advertising and being controlling of all the pictures that I take.
Well, it sounds plausible with the 1 million when you tell it like this. Well, thanks so much.
Thank you.
Modelon. Modelon offers modeling and simulation software that stretches across multiple industries and application domains. So the next speaker now is Johan Eborn, CFO. Here you are. The floor is yours.
Thank you very much. And let's see if, oh, sorry. I'm very happy to be here to present today. Jonas Eborn, I'm the CFO of Modelon and have been one of the founders back in 2005 when we started this company. So we have over 15 years of history already. And I'm sorry I'm keeping notes, but usually our CEO, of course, does mostly all the presentations. I stick to the financial figures. But I'll try to give you a very good presentation of Modelon. So we're a business-to-business software company in the system simulation area, where we provide tools to digitize workflows for engineering companies. So companies that develop technical systems like cars, airplanes, power plants, innovative systems, also new technologies, emerging technologies. And these workflows, they need models today. They need a digital representation of their system and the tools to analyze and simulate the behavior. Very often, these are complex technical systems, combinations of a large number of components. And then the engineers, they need to understand the behavior of their system, not just build it, but also understand it. The benefits that the companies get from this, that the users get, is they get a shorter time to market. This was really one of the focus areas when we started the companies. We started working with the car industry in Germany, and really the automotive industry has been moving really fast, shorter cycles for development through the last 15, 20 years. And in that also saving costs, reducing the number of physical prototypes needed, doing more of the work digitally, and also then arriving at an optimized, better product that can help our customers get market success for themselves. We're offering this software to tech companies worldwide. It's a big and growing market for CAE engineering software. And as I said, we started over 15 years ago, founded in Lund. I have a PhD from controls engineering in Lund myself, and several of my colleagues. So we started growing this business and have reinvested our profits. We've earned money basically from the start. We've been reinvesting to develop our tools and our offerings. And now we have globally over 100 people. We're in 10 different sites in 5-6 countries, and also very knowledge-intensive engineering work. So we have around 20% PhDs within our work staff. As I mentioned, we've been growing on our own revenues until a couple of years ago when we started bringing in also capital. So we brought in financing in 2019, and this is because we really see a fantastic opportunity now, bringing our software into a web-based tool and also onto a cloud-based solution, which is a super fantastic opportunity that means that we need the capital to develop this and take the market. We are pioneering this market, the first company within our section, and because we are pioneers and we have this opportunity, we are also setting very ambitious goals for the next few years. So we'll be growing by average 35% annually to 100 million ARR in 2024. So we're in an investment phase, but at that point we'll be turning into profitable numbers, positive cash flow first, and then long-term typical EBIT figures around or higher than 20% typically within our software business. So the main industries that we're working with, 4 different: automotive, energy, industrial equipment, and aerospace. We have a large number of customers already, a couple of hundred, and many of them very large companies also, a factor 100 larger than ourselves. And you can see the examples here. They're very well-renowned engineering companies that you certainly recognize. Also some new high-tech companies that are making use of our software. And we're very proud to have earned the trust of these fine companies, and we're able to help them with their innovation to be better in the market and to deliver progress in an engineering technical environment to develop also better systems for the world. You can see on the map here we're present worldwide. I mentioned we have entities in 5 different countries. It's very important for us to be in these local markets, to have feet on the ground and have both sales personnel and engineers, customer success team, service team that can work with our customers and then also collaborate worldwide. So, for example, the team in India, of course, they're important for our development and we can find good talent there. We also have OEM licensing partners, and you can see we're working with Ansys and Siemens, 2 of the top 3 CAE companies in the world. And they've chosen to work with our software because they really find that it's not cost effective for themselves to develop this because we already have the best tool. So a common denominator for our customers is really that they're facing the same challenges with the digitalization. And this is really an opportunity for us. We have the solutions for this and can deliver it to these companies. So we have collaborative tools for virtual engineering. That's core tools for the engineering companies to solve their digitalization problems. Also, sustainability is a very important trend, and that's driving really the need for innovation. A very high pace of innovation is needed to solve the world's problems. And this is where simulation can help. The engineers can both develop and analyze the solutions they need for clean progress. And also, of course, SaaS and cloud, which is sort of a hot topic, of course. This has largely not been a solution for engineering systems for the past few years, but now is becoming more and more important. There is more interest also from large technical companies to move their engineering systems to the cloud, and we're pioneering this area with Modelon Impact. That's the product offering that we have that solves all these problems. That was launched in 2020, so it's been on the market for a bit over a year now. And as an example here, we can see how we're supporting the clean energy transition. We're a week after the COP26 summit, where you can see the problems that the world is facing. And so that's an appropriate highlight. And we've seen it's not really the only purpose for our software, of course, but we see a lot of our customers active in this area. And that's because we have the content within the tool to be able to work with both some of the dominant players, large energy companies, and also the new companies, the emerging technologies, both within renewables, wind and solar, of course, hydropower, and fuel cells. Those technologies that can be analyzed and then used in the energy electricity grid, where they do create some other issues like intermittency in power generation, where you need then energy storage. That's one of the solutions that other companies are looking at, how to smooth out the variation in production in the grid. And we have the solutions also there for batteries, for example, for electrification, both of in the automotive area and in aerospace area, electrothermal heat storage, also thermal storage, and then other mechanical, chemical systems for energy storage. There's a couple of highlights here. testimonials from our customers that we've recently published. Engie is a French power company, very active in South America, where they have solar panel installations. And they can use Modelon Impact for a digital twin application and monitor their solar panels. Malta is a Google X company developing these thermal storage systems. So large molten storage, molten salt energy storage facilities that take in energy and then deliver energy to the grid. So two very interesting examples. But we also need to support the sort of traditional, conventional energy industry in the phasing out of coal and fossil fuels. And that's where we work with some of the dominant players today, supporting with, for example, flexible control, flexible operation of the power plants. That is needed to support then the additional amount of renewables on the grids. And also carbon capture and storage, a very hot topic. We've actually worked in that for over 10 years. Started with Vattenfall, and this is now becoming more interesting again. And we're very proud to support this transition. My colleague, Hubertus Tomescheit, he's actually delivering a keynote speech tomorrow at the CAE conference in Vicenza in Italy on the topic of hydrogenization. So this is one of the areas that we're active in. And some market data. So these are figures from an analysis firm in the US, SIM Data, supporting, looking at the CAE market, estimated at $7.2 billion in 2019, and looking to grow over the next few years by 7.6% annually, compound average growth rate. Of course, this is mainly a software business. There's some service also, and also the area that we're active in, simulation and analysis, is even more faster growing than the average here. But the main reason why we are projecting or planning for a four times faster growth rate of our software is that Modelon Impact, our software, really is ticking all the boxes, or the market trends that we can see. So the early stage modeling, building prototypes digitally, that's what we do. Democratization of simulation, that you can have collaboration among engineers in a team to deliver the software tools. And that's the collaboration point here. Also simulation-driven engineering, as I mentioned, that you can optimize, you can run massively parallel simulations and understand your system and make it a better product. And then, of course, cloud computing, SaaS solutions, enabling really those large volumes of simulation that may be needed then for the development. So Modelon Impact is aligned with these key market trends. And finally, we've been on First North growth market since April. We did our IPO. We presented our third quarterly report just Tuesday. And so this is a status on where we are. We took in 150 million capital from investors at that point. And the main investment areas are to expand our sales team. We're onboarding new business developers now to be, for example, entering the China market. This has been delayed a little bit because of the pandemic, but it's now moving again. And also getting more customer success, larger customer success team. The sales effort is really a team effort for us. We have the business developer talking directly with the customers, and then the engineers that support that and show the customers what they can do with our tools. And of course, product development is also core. We're investing a lot in our software development, and the new features that we're delivering, the collaborative features, for example, the easy deployment on the cloud, this is what drives our ARR growth. So we now have 2 consecutive quarters with ARR growth on track for the 35% average annually. And that's what we're targeting for the next few years to take us to the goals here, 100 million ARR in 2024 and turning into profit at that time also. So thanks a lot. That's what I intended to present.
Well, thank you very much, Jonas. I have a question for you. In terms of major obstacles in your road ahead here towards your goal, which would you say they are and how do you plan to overcome them?
Well, one is just pacing. I mentioned that the large companies, they're a bit hesitant to move to the cloud. A lot of our customers today, and this is how we're addressing it, is that we're supporting on-prem deployment of Modelon Impact. So the large customers, they have their own data centers. They can take our software and run it in their own data center. Also, of course, private cloud, which is beginning to grow also. And I think the maturity in the market is right now. These companies, they are moving to the cloud more and more. So as we deliver the capabilities, we will be able to deliver to the customers and grow our business also.
So Jonas, what is your current position in this market?
We're really pioneers, I would say. So if you look at just the engineering tools, the type of simulations that you can do, the traditionally large players is Dassault Systèmes, Ansys, those type of really large companies. They are too slow moving, really. So they haven't moved into this market yet. And in some examples, of course, they're actually looking at they're using our tool because they see that they can't develop it as fast and as efficiently as just licensing it. So, of course, there's some other competition, but we have a unique position, I would say, in the market, as we are pioneers. So if we keep the pace, and with the financing that we received, we can keep it up, and also deliver new features at a pace that no one else can match.
Well, best of luck, and thank you very much for your presentation.
Thanks a lot.
Last but not least, today here we have the next presenter, and it's Andreas Livendahl, who is CEO of Imint Image Intelligence. And Imint develops image and video processing software, that is the foundation for many of today's leaders of innovation. So here you are. Join me on stage, and the floor is yours.
Thank you. Thank you so much. So good afternoon. They've saved the best to last. We're like the creme brulee of this day. I'm here to introduce Imint to you. Andreas Livendahl, CEO since closing up to 10 years. And let's start a bit dramatic with this. Taking us back in time a couple of years to April in 2018. That gentleman is Richard Yu, General Manager of Huawei Consumer Devices. And Huawei had decided to really take up the battle with Samsung and Apple on the best photo smartphone or camera smartphone. And they made a big spiel on the video stabilization on this new Huawei phone. I was actually running circles around the Apple iPhone at that time. And, well, it's not much of a spoiler because I'm presenting this. The secret sauce behind this amazing achievement was our software, Vidhans. So Imint, in short, it's a software product company. So we build software, but we package that into products to get scalability. And you can now find our software embedded in something like close to 600 million devices out in the world. So it's an enormous number of devices that are powered by Vidhans. Our main market is the consumer market, and our vision here is to make everyone a cinematic, liberating visual storytelling by being proud of the kind of videos you capture with your handheld device. But we're returning to our roots and also addressing industrial markets like smart glasses or other more industrial type of application. And here the importance of video quality is extremely high as well, but for other purposes. Sometimes mission critical purposes for remote maintenance and so on. Short, this classical one slide, I will not go through all the points. Head office in Uppsala, where also the company was founded as a spin-out from Uppsala University back in 2007. Founders working at the Center for Image Analysis, a small research group. Started out as a drone-centric company, actually, back in those days, enhancing drone videos. We did a business transformation in 2014, listed ourselves on Spotlight at the end of 2015 because we saw this traction and opportunity within the smartphone domain. So it was really a perfect timing for us to go really heads onto that market. And that proved to be very successful. So today we have grown, not to large amount of employees. We rather prefer to have bright minds and not huge volumes of programmers. We are very niched, very laser sharp kind of company. We do have an office now in Shanghai and agents across Asia because the majority of our customers are Asian. So this is a bragging slide on our timeline. We had early years as a very research-driven company working in defense project and industrial project that really trimmed the organization to handle very demanding customers. But then, since our breakthrough in the smartphone domain, all the curves has pointed upwards. We had, for example, we received the Fast 50 award as the fastest growing company last year. So that was very nice. So we are really in a good trajectory. Our software product, VidHance, that enhance video in real time, running on the chipsets of these cameras, are mainly today in smartphones, but we are broadening our market, and that is really interesting long term, I think, for our continuous growth. Could be systems like body-worn cameras, wearable cameras, basically any kind of camera system where video is critical and the camera system is in motion. Here we have a unique expertise in blending motion sensors with image data in a really efficient way. So we can really have a full understanding of where the camera is in space and what it's looking at. Some financial slides. This is bad timing because tomorrow morning we're presenting our Q3 report. So we'll have to wait a couple of more hours to see how the last quarter went. But up until second quarter this year, this is our revenue curve in our customer currency, US dollars. And here's our cost structure. So you can see we have kept costs flattening out over the last couple of years. So we're really trying to increase performance of the organization to do things more and more clever. And that actually happens more or less out of itself if you run a company with a lot of very clever software engineers, because they hate repetitive and stupid tasks. So they will find tools and methods to actually get rid of boring work. And that's part of why we can do more with the same number of people. Here's a graph on, we're looking at half years, because typically we have seasonal variations. The second half of a year is traditionally better than the first half. So to the left, you see our revenue growth of the last couple of years, and to the right, our earnings. And you can see that we turned into a healthy profit last year, and the first half of this year was really on the sane side. This is a one-pager, a lot of text, and I think I'll spend most of my remaining time on this one, because it tries to go through where we are in the market landscape, sort of a condensation of questions I typically get when I do this kind of presentations. The product, VidHance, is a software package with smart algorithm that process video and other sensor data. It's trimmed to be really, really efficient to take advantage of the latest hardware innovations in terms of hardware accelerators, because processing video is processing an enormous amount of data in very short time. If you're recording 4K video, that's an enormous amount of megapixels, and if you have 60 frames per second, that means you have that enormous amount of data 60 times per second. And we need to analyze that and process that and create a better video out. So that's really computing on the extreme side. Part of our success is also that it's not only algorithms that needs to be best in the world. Our customers are very demanding. It's a hyper-competitive landscape, especially in smartphones. But it needs to be easy to integrate. It needs to be quick. We can't really mess things up in the very complicated camera pipeline. All the things that we as consumer don't see. We see the preview, we press click and record, but there is actually tons of things happening underneath in real time. So by working really close with our key customers for a number of years now, we really understand how they build phones, what's important for them, how they do tuning, what impact will it have if they change the lens, if they have an optical image stabilization. There's a lot of complexity under the hood, and we really hold their hands and make sure that they deliver a premium product on time. So that's part of the value and part of the product. And in terms of the customer value, of course, in the smartphone domain, it's obvious for everyone that camera features is one of the prime things that consumers are looking for, and where the competitive battle is really happening. Everyone wants to say that we have the best camera phone. If you look at the new Pixel 6 launch or the latest iPhone launch, I'd say 40–50% of the presentation is about camera functions, right? People just expect that you should make a call with it, so they completely neglect that aspect. When we go to other markets, for example, like body-worn cameras worn by police or smart glasses by remote maintenance workers, the value is, of course, to actually being able to extract actionable intelligence, to be able to actually see what the person is seeing or that camera is seeing. So that becomes really mission critical. If we turn to the money, how do we make money? Main revenue is from IP licensing. So our customers pay us for the right to use our software. Typical model in the consumer space is royalties per unit. We have a mix of other models as well. We prefer to have a mix because that makes us less vulnerable to big fluctuations in volumes. We have some recurring revenues for licensing the tools and providing the support they need. They are a smaller part than the IP licensing. And we're trying, as I said, to have a healthy mix of revenue. And when we go to the industrial market, then we typically see long-term agreements, whether consumer is more short-term, high-paced type of business setups. Market space, as I said, smartphones, that's more than 90% of our revenues today. We think we have about a 5% market share within the imaging software market available to smartphones. So there is still a lot of room to grow for us. We see the longer-term growth really in other markets. First, we start with things that are similar from a technology viewpoint to smartphones, like smart glasses or smart watches or whatever items that are mobile, needs to run on a battery, and has a camera where you can record video. Of course, we have competition. To mention two of them, one is a company called Arcsoft in China, another Morpho in Japan. Strength and weaknesses, and we try to gradually take over their market share. I hope they are not listening, or they know that we are planning that. Sales as a company now, it's pretty straightforward. We're working with 20+ key accounts, so we're a very narrow type of sales. And here we work with key account management. We put a full team from sales to customer engineering to technical sales for our most important accounts. As we are broadening now to other markets, we are working more with account-based marketing and PR activities to actually, because we can't, now we have a target of maybe 20+ customers that do smartphones. If we're looking at the broader market for mobile camera devices, there are thousands of companies, and we can't hunt them individually, so they also need to find us. And we see a lot of spillover of our brand value from smartphones, because everyone understands that's the hardest market to be in, where the demands on video quality are the highest. So we actually get customer inbound calls that understand that, okay, if you can solve this for a smartphone, then you can probably help us with our product as well. Third, very important sales channel for us is our partnership with the silicon vendors that actually do the chipsets, the computers that smartphones run on. One big name is Qualcomm, the US-based company. MediaTek in Taiwan is another. And we work very close with them, and we follow them to their customers as well. Because once we spend the time to integrate our software on that hardware platform, it's very easy to make it run on another product as long as the chipset is the same. The portfolio, this is a boring slide, so I will not show that one. This is a nicer slide of the same information. It shows some of our products in our portfolio. One core element, or actually I go back to this. It is boring, but it's important. The gray boxes at the bottom might look gray and boorish, but it's really a key here to understand why we now are making profit while growing rapidly at the same time. That's because we invested a lot in this platform, which is really a generic, very modular software architecture that extracts data from sensors, cameras, and motion sensors, and process that in a very clever way, so that on top of that, we can build products that are user scenario-centric. So they are actually built on this huge platform where we put most of our investment. Another important part of this platform is the software development kit. That's the tools and documentation and support we provide to our customers so that they quickly can take our algorithms and infuse it in their product. So here's the nicer picture again. You see a lot of our products are focusing on video stabilization, where we actually have created a bouquet of products that are based on very accurate motion estimation of the camera and what's in front of the camera. So normal video stabilization, we are world leading at. We are cooking up our next generation that we will be launching shortly, which will even further increase the gap to the second best alternative. But we created a lot of different functionality around stabilization to fit use cases. One example is some cameras have really super zoom lenses. You can go up to maybe 100 times zoom. That's very nice if you want to take a photo on a church a couple of kilometers away. But if you actually try to hold the camera still, every little angle of shake will shift that church tower 100 meters. So we actually can stabilize that. So you can be sure that I will capture that church tower. Another use case is using the front camera for selfie video. You're out in the street making a short video, you want to show the background. Problem is if you had a photographer helping you, like the gentleman sitting down there, it's his job to make sure I'm well composed in the center of the frame, right? That's his job. If you're using a smartphone, it's Vidhan's job, it's our software's job to make sure that the face is centered and stable in right proportion, and you don't get any strange lens correction artifacts so that you will get thin face, fat face, kind of strange effects, which will happen if you don't have our software. So two examples. Vidhan's, this is a technical, I'll just clarify because sometimes people think we are making some kind of photo or video app. We are not. We are making a very, very efficient software that we inject underneath the camera app. So it comes. So if we have a customer that design in Vidhan's, it comes with the Vidhan's built in from factory. Most consumers won't know that we are in there. They will just be amazed on how stable video recording they can make. So that's where we sit. Here's another, going back to the financial and some explanation on our strategy and why we are successful now. The middle, I'll just talk about the middle one here. This is our revenue mix in terms of products, where we started as a single trick pony with video stabilization, and now we have grown a bouquet of new functions and add-on functions as we have learned our customers' needs. We are trying to, in those discussions with customers, we understand that, okay, so this is also an issue. Well, it's in our hands to solve it, and because we have this motion estimation, we can do a better job than whatever solution that they were considering otherwise. So over time, we are increasing our portfolio and the revenue share of new products over legacy products. I could mention that we are almost almost getting a problem with a very huge or strong cash position, as we are now closing up on 2 years with positive cash flow every quarter. That's a very nice problem, though. This is an explainer picture. These are not real data, a disclaimer, just trying to explain why it took 3-4 years before we were showing these nice figures. It's because it's an industrial market. You're working with really huge accounts, and it takes time. It takes time to build stuff. And then it takes time for customers to evaluate and design. Then it takes time for them to launch the product, where we start to collect royalties. And also working with a very large account, and everyone that's working with B2B in complex environments knows that you can win a customer and they will try you out for one product. If you succeed and you build confidence, they will be looking at, maybe we can introduce you in more products. And by the way, do you have more products now? Have you expanded your portfolio? And so we grow over time. So the first year is typically a loss when you take on a very demanding customer like Huawei or Xiaomi. But over time, if you build the confidence and you earn the trust, you can grow revenue and you can shrink cost, because now you have a system in place for how you work together. Finally, on why we think we are in a nice spot. We had a speaker earlier that came from the other end of photo and video as the social media aspect. We are in an extreme camera evolution race. Smartphone is driving the market, but we see cameras pop up in more and more type of devices, and we really have a generation that communicates through video as a native and natural means of communication. So we are the guys behind this revolution that supports real high quality, professional looking video from pretty limited devices. So we are really in a good spot. And here's a quote I won't read from product manager from Motorola that basically explains why they like to invest in us, because they see what we see, and that is that consumers expect a lot of possibilities using video on their devices. So that's why we are trusted by all these big brands. HMD is company behind Nokia. I think we should put Nokia instead. It's a more well-known brand. That's it.
Well, thank you, Andreas. Final question here for today. Which sector do you think you will have the biggest growth in? Is it body image cameras? Is it smartphones, or is it drone imagery videos? Yeah. What do you forecast? What is your forecast?
I think we might see, in terms of relative figures, highest growth in other type of wearable cameras. Could be smart glasses or other things, especially that if it hits the consumer market after first being introduced in the industrial market. That's still a big bet out there, but smartphone is very convenient, but if you're going to use video more and more, you want to have even more nifty or convenient ways to carry a camera. So wearable cameras, I think, is in general.
Well, maybe we'll meet here next year, or maybe a few more years to see if that was right.
Exactly.
Well, best of luck, and thank you very much, Andreas.
Thanks so much.
Thank you. So, it's time to conclude. And I'd say the focus today, for me, as listening in here and asking questions, or two major trends I'd like to identify. Many of the speakers have addressed sustainability, obviously, and the need to use technology to address the big threats, not to say the least, the climate threat. And also the topic of integrity connected to data and to cloud storage has been very much on many presenters' agenda here today. So two of those major trends that I've noticed from my side. But overall, fantastic smörgåsbord, as we say in Swedish smörgåsbord, or English, you might say buffet of solutions and fantastic companies here presenting from the stage here at Spegelsalen at Grand Hotel in Stockholm. And Naventus will be back in spring for another event, the Renewable Summit. We don't have the date yet, but I'm sure you'll hear from us at Naventus for a new invitation shortly. So take care, and let's see when we meet again. Bye-bye.